One, two, one, two, one, two. Ladies and gentlemen, a very good morning to you all. Just a quick note, we're going to get started in about 5 minutes. So we're going to ask everyone to grab their coffees, grab a bite to eat, and find a seat. This front row is a little bit open. There's lots of space over here. So feel free to move a little bit closer. And as we said, in about 5 minutes, we're going to kick off with this summit today. Thank you very much. Done, I'm going home. 1, 2, 3. Hello, hello, hello. Good morning once again. How are you guys doing? You guys good? I like that. That's awesome. That's very nice. So I'm going to ask everyone just to give you another 2 minutes, a 2-minute warning. I see we've got a couple of people coming in still. Just a 2-minute warning. We are going to get started in a moment. While we're waiting for people to get seated, though, I thought, in the spirit of collaboration, we should go around and find out a little bit about who's here today. So, how are you? You good? I'm okay. Will you stand up for me, please, sir? Okay, I think this mic is working. I'm going to give this to you. So, first of all, who are you? Where are you from? What are you doing here? Tell us a little bit about yourself.
Good morning, everyone.
That's where you guys say good morning.
Thank you. My name is Kibitsa Mangalechi, all the way from Lesotho in Maseru. I work for a company called Vitality Hospital Management Services. So I came here to learn more about Port 360. And I hope to learn anything more than that. Thank you.
All right, so you're here to learn. Okay, that's always good. When I asked good morning to everybody, you gave me the most positive response. You said, awesome. I said, good morning, everybody. How are you guys doing? Some of you were like, meh. This gentleman over here, he's straight out. He's like, I'm doing awesome. I want that energy of awesome to be a little more contagious through the room. So I'm going to hand you the mic. And same as we did before, tell us who you are, where you're from, and what you're hoping to get out of from today. And also, why are you awesome?
Top of the morning.
Top of the morning. Let's give a top of the morning. There we go. Very nice. Very nice.
This is Kenneth Koza from Eagle Nest Academy. And so we conduct a regulatory examination, RE5 as well as RE1, which is basically a license for people to work in the financial sector. So yeah, I think I'm extremely excited for this event. I was there last year.
Okay.
So yeah, consistency is key.
Consistency is key. That's a bit of free advice for you guys, eh? It's barely the start time and we've already started. Okay, as we said, we're here for a bit of learning. So I'm going to go around this side. See, lots of people like to stand. That's good. It's a sign of youth. Good morning.
Good morning.
How are you?
I'm very well, sir. How are you doing?
I'm very good, thank you. See, that's the right response in this room. Another little lesson for you guys. In a room like this, when somebody says, how are you? Immediately you say, I'm doing fine, thank you, because people could be recruiting. Don't say you're sick or people are looking for clients. So that is the right answer. Somebody asks, how are you in this room? You say, I'm good, thank you, leave me alone. No, I'm just kidding. All right, I think we've got the bulk of our people here. Nick, are we happy to roll? All right, ladies and gentlemen, it is my absolute honor to welcome you guys to the SAFIS Summit 2026. I'm going to ask you one more time, including Mr. Awesome. How are you guys doing? Awesome, awesome. It's the next late person to walk through that door. We're going to make a scene. I think we're going to have some fun with them. All right, ladies and gents, there's the next person. Should we find out why they're late? I think just for a little bit of fun, let's go. I like to make trouble in the morning. Good morning, sir. How are you? Good. Myself and all these people wanted to know why you're late.
Late? I'm not late. I'm not late. I'm early, but your parking is late.
Okay, fair statement. Parking seems to be a little bit of a challenge this morning, but all good. So as we say, ladies and gents, a very big welcome to everybody. Before we jump into the fun stuff, just a quick couple of house rules. Emergency exits, should there be an emergency, we've got the door that you came through over here, and then we have a door at the end of the room over there. Bathrooms, if you're looking for the bathrooms, you go out this door, you turn left, you go along the building, and the bathrooms will be on your right-hand side. Gents are first on the right-hand side. Ladies, you just go round the corner. Yeah, I think that's the house rules. Smoking, don't smoke inside. I think everybody knows that. We don't have to worry about that. And then very quickly, everybody has their little name tags with a barcode on it. Now, what we're trying to do is get everybody to collaborate. We want you guys to connect and meet each other. So on that little barcode, if you're going to use it, you can scan somebody else's. So maybe while you're sitting here, while we're doing the entry-level housekeeping rules, scan the barcode on somebody else's barcode, and that's going to take you to a page where you can enter your details, your contact details. Please enter your details there, and that is going to allow you to share these details with whoever you want to meet today or whoever you connect with today over the course of the day. So you only put your information in this first time, you only populate it once, then for the rest of the day, every time you want to meet or chat to somebody, you can scan their barcode and share your details. There's even a button that allows you to directly email the person straight away. And what's super awesome about that, because we've all been to conferences where you meet cool people, and then 2 days later you don't remember what they look like or what their name was. This will consolidate all the meets that you've had today, so it'll say you met so-and-so, so-and-so, and so-and-so, and you can now revisit those conversations. So it's not just a flash in the pan. You can actually use those conversations and those meetings to something more profound and to drive your business. Now, for those of you guys who don't know, this is my second year at SAFIS, so very fun to be here. This is probably the only event that I get to do, the only event in the whole world that is unified by death. It's really special. You guys are the only guys. If you don't like death jokes, it's going to be a very long day for you. We like telling a good death joke. But my name is Temple Robin. I'm going to be your MC today. So I'm an MC. I'm a voice artist. I do a little bit of production. More importantly, I'm a father. I'm a husband. Been married a couple of years now. I've lost count, but don't tell my wife that. My wife loves a little bit of true crime. Any true crime fans in the house? Yeah, nah. Obviously in this room, you true crime, man. What sort of true crime? Why do you like true crime, ma'am? You said you like true crime. Who said? Did you say you like true crime? Why do you like true crime? You like guns. Okay, well, everyone know not who to mess with today in the front row? My wife loves a little of true crime, to the point where she's watching it all the time, eh? It's a bit nervy. I don't like true crime because all the stories start the same. It's always, he lived in a quiet neighborhood. I'm like, I live in a quiet neighborhood. He was well liked by family and friends. I'm liked by family and friends. It's only when they get to he liked to take long runs on the beach, that I'm like, oh, lucky it's not me. I am still alive. They say I'm a father. I've got 2 beautiful children. I'm at that phase of my life where I get to show people, those of you who have kids, you're always showing pictures of your kids. One thing that upsets me about that, though, is I show people pictures of my kids, and they're like, sure, they're actually quite cute, eh? They're actually very cute. And I'm like, but what do you mean, guys? I can make cute kids. But those people that don't have cute kids. In South Africa, we have a very pertinent word, very versatile. It's the word shame. And we've all been there when someone reveals their child and they say, look. And you go, shame, yo. Shame, Baba. So shame, very versatile word for us. But as we say, we're here in an industry that's very unique. And I think that's one of the things that we want to chat about today, is the uniqueness of your industry. In my industry, as a freelancer, if I say to people, hey guys, things are going well, man, I'm fully booked, people are happy for me. Yeah? If you guys, especially the funeral guys, if you guys are fully booked, people get worried. If you say, yeah, I'm fully booked, people are like, start checking out on the hantavirus and such things. It's a crazy world that we're living out there. But I think the more important thing, in the spirit of collaboration that we want to tackle today, is once again, I'll reference my own industry. If you see 2 freelancers get together and they say, oh, how are you doing? Everyone always tries to be doing the best, eh? No, I'm busy, hey, I'm busy. I'm acting in things, all sorts. You say, oh, what are you acting in? A foreign film on Showmax. For those of you who don't know, Showmax closed down, so that's a safe bet if you're not working. Meanwhile, you're buying Viennas there at the house because tough times do last, guys. I don't care what that quote says. Tough times last, and that's why it's important for us to collaborate. And I moved to Joburg. I've lived in Joburg for about 10 years now. One of the first lessons I learned when I moved to Joburg, the guys came up to me and they said to you, in Josie, If someone asks you what you do for a living, never answer. You mustn't answer because they're trying to gauge how much respect to give you. You know, if you say you're a lawyer, you get lots of respect. If you say you're a bricklayer, you get less respect. And so for a long time, I believe that's the way the world was. Somebody asked you what you do, I never said anything. But then someone told me a similar or more interesting quote. They said, people at the bottom are all about competition. The people at the top are about collaboration. And after thinking about that, I realized sometimes when I ask people, what do you do? I'm not asking to try and gauge how much respect to give them. I'm asking them, what do you do? Because I want to see how you can plug into my network. I want to see how we can work together and make the system better, which leads me to another quote, and that is, competition makes us faster, but collaboration makes us better. And we need competition. We need people to be on our toes, pushing us further. We need people who are just ahead of us, pulling us forward. But we also need that collaboration that says, hey, I've got a strength, you've got a strength. And I think looking at what we're trying to achieve here today, the point of SAFIS, the SAFIS Summit, is to go, let's collaborate. So if I can ask you guys one thing, is to head upstairs during the breaks and everything, head upstairs and meet our exhibitors, go and have a conversation with them. They've got systems, they've got processes that can streamline your business. If you're looking for new payment options, if you're looking for new insurance products, these are the guys to chat to. These are the people to chat to. But even more importantly is the peers and your colleagues sitting alongside you in the room. These are the important people in the industry. So let's be awake today. Let's have conversations and look for ways that we can collaborate and push the industry forward. Okay, I'm not going to bother those guys as to why they're late because I think it puts a little bit too much pressure on them. But on that note, ladies and gentlemen, I am going to welcome our first speaker to the stage. Can you guys warm up the room a little bit? Let's. Can I get a little bit of a woo-woo on the side? Can I get a ooh yeah? And this side, what should we say? Silence. This is a team sport, Baba. We're going to do all of that again, so I hope you guys remember what you're doing. You guys aren't going to do silence. What are you going to do? I'm going to put you on the spot now. We're in the business. Everyone say death on 3. Okay, cool. So everyone, little clap. Little clap, little clap. You guys do your thing. Woo. You guys do your thing. And you say death. Oh, okay. Not too bad.
Just before you hand over to Marius, can this person just move their car? They're blocking a gate for one of the tenants.
Okay, someone with a Jetta DL46 HWGP. Ma'am, is it your car? Over there? Oh, is it your car? She nearly tried to take it from me. No, I'm just kidding. Okay. Thank you so much. We will wait in silence till you get back. So don't run. Don't run. Ladies and gentlemen, I think it's time to welcome our first speaker, a man who makes all of this possible. Please put your hands together for CIO at 360 Administration and Systems, Mr. Marius Brits. Cheers, Captain.
Hello, everyone. What Temba forgot to mention is I'm his professional photographer. So if you want to take photos with him, apparently he's got a very funny laugh. He played in a Leon Tryst movie. Okay. I've got a point of sale device. If you want to take some photos, we can swipe. More than welcome to. A little bit of a backstory with Temba. The first time I met him was last year at this event. And I invited him to a bit of a networking event. He wasn't too sure what it was because I said, right after this, there's an event happening in Cape Town. Would you like coming to this? We're starting this thing called the Lacquer Network. And he's like, it seems a bit like a cult. So I said, it's not a cult, maybe a little bit. And he came with, and that's when I actually realized he's a bit semi-famous because there were so many people that woke up that next morning so disappointed with finding this oak in so many of their photos because they just wanted to take a photo with him. So thank you, Temba. It's lucky to have you back. Then I just want to say thank you. If you see me shivering, I'm not a professional speaker. I'm an IT oak. So this is nervous shivering because there's never been so many people in one room that can fire us. So I don't want to mess this up. So I just wanted to say thank you to all the sponsors for backing this crazy idea that I had, that I brought to my two business partners. But more than a year ago, the end of 2023, our company evolved into much more than just a system. It evolved into a consultancy business. People always tend to ask us, do you know Oak that can do underwriting? Do you know Oak that can do payments? Then we're like, we do systems. We know people that can do systems. And it just evolved from that. And we basically, the end of 2023, I said, why don't we have a conference? Let's invite all of our clients, all of our potential clients, partners, payment partners, everybody into one room, and they can all just collaborate with each other. And it's been quite amazing. Last year, there were so many people that got introduced to each other at that event, and it was literally put together in a matter of like 2 months. So I just want to say thank you to everyone. Now, SAFIS is all about collaboration. Last year was a bit about innovation. My business partner will speak about that. This year is all about giving back. So the thing is, like, we believe this whole industry, we shouldn't just look after ourselves. This is why we became a consultancy business more than anything else. We want to introduce you to the right people, because your success at the end of the day is our success, is everybody else's success. And by putting our company in front of like a conference like this and bringing people in together in a room, someone has to take the lead and do these type of things in this industry. It's been long overdue that something like this needed to happen. And last year, a lot of our competitors also pitched up at the conference, and we weren't too sure how we're going to deal with it. This year, we actually welcome it, because if someone needs to take this industry forward, we're happy to take that flag and run with it. So I just want to say thank you once again for everybody here, and I hope you have an amazing day today. Thank you. Nice.
Lekker. Thank you, Marius. That was very insightful. He told me to say that. He said, whatever I say, just come back and say that was very insightful. So very nicely done. I don't know if we've mentioned it yet, but between last year and this year, we've grown the numbers. The numbers look good. I think we've just about doubled our attendance, which is really incredible to know that more and more people are seeing the value and flocking towards the summit and this collaborative spirit. Talking very briefly about meeting Marius. I didn't know he was going to go down that road. So we met last year at the summit, and then he did. He said to me, listen, I've got this thing in Cape Town. You should come and attend it. It's a launch thing. And I remember telling my wife, she said, wait, where are you going? I said, I'm going to a thing called the Lacquer Network, with this oak that I met the other day at the funeral summit. She said, you're going to Cape Town with a funeral guy for a cult-like summit. Turns out it actually worked out really well. So thank you for that. And yeah, really grateful to be here for a second time. I generally try and stay away from the Leon Schuster thing now. But since we brought it up, not Leon Schuster's friend, guys. It's a different guy. And I'm sorry that I have to keep going through this thing, because in my mind, and I can see you ladies are laughing, guys, the maths doesn't check out. The maths doesn't check out. I keep finding myself in these scenarios where ladies come up to me and say, hi, it's so nice to see you in person, eh? I grew up watching your movies. But Ethel, you're 65. How did you grow up? I'm all for black don't crack, but we're not Benjamin Button, guys. That's another story altogether. All right. So I think on that note, we should move on to our first speaker, proper speaker. He's looking cool, calm, and collected. He's trying not to make eye contact with me. We're going to talk a little bit about sales in a second. I just wanted to show you guys the importance of sales and being good at sales. So KFC's got the drive-through. They used to do their R2 donation. You guys remember that? Yeah, R2 donation. You order your chow, and they say to you, would you like to give R2? Now, I had this thing waxed, guys. I go to KFC. I order my Streetwise 2. They said, would you like to give R2? I say, no, thank you. I go to the next one. Don't be shocked. Don't be shocked. I was ordering a Streetwise 2, not like a bucket. It was like Just needed enough to feed me, you know? And that was fine. That was my strategy all the time. Here's the nuance when it comes to sales. A simple change can make things more effective. I drive through the KFC drive-through the one day, pull up at the window, lady says to me, "How many children would you like to feed today?" I can't say none. So I said 2 children. I overcompensated, but that's just the power of switching up your sales technique ever so slightly. It absolutely exaggerates or makes that more powerful. So on that note, a man who knows about sales is a sales manager at 360 Administration Systems. Please make some noise for Mr. Warren Mkonto. Cheers, my brother.
Thank you. Good morning, everybody. As mentioned, my name is Warren Mkonto. I am the sales manager at 360 Administrations and Systems. I'm used to selling a lot. I'll try not to do any sales here, but you guys can check me out on our booth so that I can be able to explain to you what we can offer. But right now, or today, I just want to speak about 360 Administration, the growth, the reach, and also the future that we intend to bring to our clients. So talking about growth, actually when I started about 8-9 years ago, I was employed as an accountant to look at the figures and everything. And then throughout the years, what happened is that I got to understand the industry. I got to understand the different people that make up a person purchasing a policy. That gave me a lot of interest. And when Stephen and Maurice and Paul decided to say, you know what, we're going to start a sales department, I think I was one of the guys that raised my hand and say, you know what, I want to be part of that. I've never done sales in school. I've never done sales anywhere. But because of the way the industry is, it gave me a lot of oomph to say, you know what, I feel I can sell this beautiful product those gentlemen brought to us. When COVID hit, I think that's one of the innovations that I'm proud of as 360. We developed something called the Minute Policy. Those that don't know the Minute Policy, it's an online application form that was developed to assist our clients in times where agents couldn't sell. So the Minute Policy is an online application form that a member can actually capture themselves online, and an agent can assist over the phone to capture, obviously, looking at compliance and also accuracy of the data. So that tool is a tool that I like, mostly in my sales pitch, because it helps clients to get members as quickly as possible. It also assists members to pay the premiums as quickly as possible. And I feel like in this industry, once you get a client that has the oomph to take out the policy, I say if you're able to send out a policy document in less than 20 minutes, do that. If you're able to also get a payment in less than 5 minutes, do that. And that's where now the whole collaboration with all the stakeholders come in within the system. So that's a very one innovation that I like the most. And probably when I do a demo for you, I will start with that as well. In terms of the enrichment, I think there's a lot of clients that I see here. Thank you guys for coming. They would know that our marketing tool, it's more about relationship building. We are not a system that we're going to give you a system and say good luck. No, we give you the system and then I save your number on my contact details, and then we create a WhatsApp group to take you through the system and also to give you the other stakeholders that we're integrated with for your clients not to struggle in terms of payments. And also, I always say this about an app. To say that if I buy a funeral policy, it's not something that I'll go home excited about to tell my wife, I'm like, yippee, there's a funeral policy that I bought. And it's not a product that I can show my wife that I've bought. So as little as an app for them to be able to log in, able to view their policy documents, able to pay on the app, that's something that's very valuable to them. I always make this example when I'm doing sales pitches to say that I've got an F&B app on my phone. I know money didn't come in, I know money didn't go out, but I always log in. They say, oh, okay, it's still there. So the same is that it's what I feel like our clients who buy these policies should have easy access in terms of logging in viewing the policy documents, and also making payments online so that the premium doesn't cost them a taxi fare or a train fare, whatever distance where the branches are. So that's where our enrichment is. We say that when we give you the system, we create a relationship. We listen to you in a sense to say, if you say that, okay, you know what, Warren, I think that our business operates in a certain way, and then I go back these three men. I think in some time they will lock their doors for me because you know what, that relationship that I have with clients to say, you know what, we want this vision. I also have to take it to the team to say the client has this vision to be able to be competitive in that sector. In terms of the future, we're going to still maintain that relationship. That's my motto, and I'm very happy that the three directors are also backing my motto to say that I want to have personal relationships with my clients. I want to understand what they need, because when they tell us what they need, we are able to better the system to be able to service everybody in that industry. Again, one innovation that I'm very excited about, and I saw some few clients that here also will be very excited about, it's the PALA system. It's something that I've been bringing to the directors to say, you know what, there's a gap in the market. Our clients are not happy about, how the funeral arrangement goes through the industry. So the innovations that I'm doing with the development is that we're going to do a PALA system that begins from the driver up until where the person is put to rest. And that system will be seamless, efficient, and simple for our clients to be able to operate, and the reporting also being accurate. In my closing statements, I just want to say a couple of things. I would like to say that the growth of 360 administration system has been built on the relationships that I'm talking about: innovation, teamwork, and strong leadership from our directors and the staff that we have at the office. We are proud of the impact that we've done and continue to make within the funeral industry, and we remain committed to delivering solutions and practical, efficient, and variable to all our clients and, of course, future clients that we're going to get today. So thank you guys for today, and have a great summit.
Thank you, Warren. All right, quick question for everybody. Who scanned and entered their details? Just the six. Just the six of you. Okay, so we're going to ask everyone. Marius, you've done it. That's good. Usually leading from the front. That's a good sign. So just to let everybody remember that, you can fill that in. You can do it quietly as we are going. So you're back. Where did you park? No? Parked away from a gate this time. No, nicely done. So Warren touched very briefly, and I think it's quite important. We're going to be talking about innovation quite a lot, especially in our next speaker is going to come up and talk about innovation. We live in a time of AI. I'm almost sick of talking about AI at the moment because everybody wants to talk about AI things. But I think one thing that's incredibly important that I think we don't always think about is the value in a relationship and the value in personable connections. And I was reading a short write-up the other day that were talking about the automatic door system. So there's a hotel. They're in a bit of financial difficulty. They're looking for ways that they can save money. They get a consultant in. The consultant says, you know what, you're paying a doorman 100,000 Rand a year to open and close a door. We put an automatic door in, that's 100,000 Rand saving. So everybody looks at it on paper, they say, brilliant. Doorman goes off, we put an automatic door in there. Now, the problem with that is we see it as a financial win because we've saved 100,000 Rand, but there's an intrinsic value that goes along with that doorman no longer being there. And that comes in with the personal relationships that he has with the people coming in and out. You've got an extra set of eyes, so from a security perspective, you can see what's happening. You've got somebody who can give you feedback. You've also got a relay straight from what's actually happening on the ground. An automatic door can't tell you if your clients are getting bored of the foyer or they'd like new flowers or anything. So you don't have that information, which is super critical. So I think that's one of the things to keep in mind as we talk about innovations, we talk about AI and technology and integration. As Warren says, he wants to keep his relationships personal. He wants to be able to phone you guys and say, hey, what's going on? Tell me exactly what you need. He'll relay it to the relevant people. And I think that's incredibly important. And it just shows what the commitment is to growing the industry and moving on to the future. But talking about innovation, we've got a very special man who's going to be coming up and telling us a little bit more about the innovational steps that 360 is taking. So, ladies and gentlemen, please put your hands together. I've not located him in the room. He might drop down from the ceiling somewhere. I'm not too sure. The CEO of 360 Administration and Systems. Please put your hands together for Mr. Stephen Sands. You're blending in there.
Yeah. Morning, everyone. And honestly, a really heartfelt welcome from us at 360 Administration and System. Thank you so much for making the time to join us today, and also a massive thank you to all the sponsors that we have here today. I'm just looking above there, and it's awesome. I'm super happy. And once again, Maury, well done. Thank you very much. As Temba said, I'm here today to speak about innovations. I don't know, a lot of people think innovations, oh man, it's a new system to learn. It's just going to make my life complicated and add extra drama, but no. What I'm about to show you is not that at all. These are tools that we have designed to try and assist in make your life better and easier. It's to complement your business and not to replace people, because I know a lot of people think, oh, AI is going to replace me. This is not the case at all. These tools we've designed are going to assist the business, going to assist his employees, make the business more profitable, and make the employees more valuable to the system. I'm going to show you 3 videos. After each video, I'll give a brief explanation, but I'm not going to talk about them. I'm going to rather let the videos do what they were designed to do. So, sir, can we please play our latest AI reporting tool video?
Data drives every decision. Introducing the AI-powered reporting assistant from 360 Administration and System, built to transform reporting in the funeral industry. Simply ask a question in plain English. How many members were captured in January, February, and March 2026? Display the results in a bar graph. Within seconds, the AI generates a complete visual report. Need deeper insights? How many members under the age of 45 missed payments in January 2026? Or track business trends instantly. How many members canceled their policies from January to April 2026? Display the results in a line chart. No manual reporting, no complex systems, just intelligent, real-time business insights. Accurate, automated. Welcome to the future of funeral administration.
So what we've just shown you there is a intelligent AI reporting tool. So gone are the days of you speccing a report, sending us the spec, we're scheduling it for development, please add, oh crap, we forgot to add column B. That's a thing of the past. Users can empower themselves to draw their own reports, whether that be a graph like we showed you, if you want an Excel document, if you want raw data, you literally tell that machine what to do, and it's going to perform everything for you. The benefits are obviously time, cost. I don't know if we've thought it through properly at Pol 360, because it's going to do no more report development for us. And it's going to streamline your business and giving you access to that data that you so desperately need to run your business. Our next innovation is our biometric sales process. I'll let the video do its thing.
Today, we're excited to showcase one of the latest innovations added to our system, real-time biometric policyholder verification. Our focus has always been to simplify and modernize funeral policy administration. But in today's environment, speed alone is not enough. The industry also needs stronger identity verification, fraud prevention, and compliance. That's why we've integrated advanced facial biometrics and liveness detection directly into the policy onboarding process. This means that while capturing a new policy, the system can instantly verify that the person is physically present through real-time facial liveness technology, preventing spoofing, impersonation, and fraudulent enrollments. In addition, the biometric profile is securely matched against the policyholder's Department of Home Affairs facial image record, delivering highly accurate identity verification in real time. The outcome is a faster, safer, and more trusted onboarding experience for funeral administrators and policyholders alike. At 360 Administration and Systems, we believe technology should not only improve efficiency, it should create confidence, trust, and security across the entire funeral industry.
So what that process is showing you is that at point of sale, you will have the live person in front of you and you're verifying and validating that that person is actually the right person that they say that they are. What that does, that creates a line of trust between the broker, obviously selling the policy, and the member. It also eliminates most fraud, as well as allowing the agent not to misrepresent the sale. So it's a broad spectrum that it offers. It's not just a case of taking the guy's photo, validating at Home Affairs, and off you go, everybody's happy. The secondary benefit of that, you are creating a digital footprint with you and that member. So in line with Pol 360's vision about going completely digital, these are the steps that will allow you for a digital footprint, so there won't be a case of anymore, I misplaced the policy document or the guy forgot to sign on page 3. It's a thing of the past. You've got a whole digital ecosystem created around that member at point of sale, creating that trust and the bond between that sales agent and your new member. So that's our goal and vision with that. Our last innovation, what I'm going to show you, is something that is extremely close to my heart. I'm busy writing my master's thesis on this, so I will, if you would like me to indulge a little bit on this, I'll play you the last video about our machine learning and AI predictive modeling.
Today, businesses don't just need software, they need intelligence. At Pol 360, we are transforming the insurance and funeral administration industry through advanced data analytics and AI-powered machine learning. Our platform doesn't just process policies and claims, it continuously analyzes customer behavior, payment patterns, fraud indicators, and operational trends in real time. This allows businesses to make smarter, faster, and more strategic decisions. By leveraging predictive analytics, Pol 360 helps identify at-risk clients before lapses occur, improving customer retention and long-term profitability. Our AI-driven monitoring tools also detect suspicious activity, helping reduce fraud, strengthen compliance, and protect both businesses and policyholders. Beyond fraud prevention, we provide actionable business intelligence, from regional claim trends and premium collection insights to operational performance analytics, enabling companies to stay ahead of industry shifts instead of reacting to them. With over millions of lives managed across Africa, Pol 360 is not just a policy administration platform. It is an intelligent growth engine designed to help businesses automate, scale, innovate, and lead the future of the insurance industry.
So with our new machine learning, what we are trying to achieve, we are trying to create a proactive, intelligent model where you can predict trends in members to act proactively instead of reactively. So for instance, you know that Pitt missed his payment in January. Our goal is to rather go back and say, guys, Pitt is going to miss his premium in January coming up. So you can formulate campaigns, you can predict when Pitt is going to miss his premium and act proactively on that. During my research, what was interesting to me, that what I picked up, is that I was doing payment analysis on people's ages. And people between the ages of 29 to 35, if memory serves, have a 10.8% likelihood of not paying versus the next age tranche. And that is even heightened in the month of December. So you know that the younger folk, it seems like maybe they want to rather take their Christmas bonus and go to the pub or something like that during December. So you can take that intelligence and do focuses, retention campaigns, knowing what the trends are and what's going to happen in the months to come. So that is our goal. It's all about creating intelligent software and giving our end users and consumers the insights to your own data. Because at the end of the day, that data is power. It's not about creating flashy presentations in the boardroom and wowing all the executives to say, holy moly, that was a brilliant presentation. No. It's about taking the data that's available to you and making a real difference to your company and your clients' lives. And that's all I have to say about our new innovations. Thank you, sir. Of course, go for it. Sorry, I really can't hear you nicely.
One second. Moving through.
Can I talk now? Yes, I can.
Yes, I can hear you.
Thank you. Quick question.
Yes, sir.
So you said that your AI has got predictive capacity to determine whether or not someone is going to default on a premium. Just out of interest, what are the behaviorals or what is the metric that it uses to determine that?
So that's one of the aspects that we can analyze. So it's predictive modeling. It can't predict the future, for want of a better word. It won't predict that Temba changed his bank account last week, Wednesday, and you're not going to collect money for him. It takes predictive matrices and it takes a trend over time. So it's going to be payment history, it's going to be age, it's going to be demographic, it's going to be number of lives insured on that policies. So it's different aspects of that matrices that you are inputting into that machine learning model. It's called the target variable, if that's the right word. Answer your question. Lekker. All right. To add on that, sorry, I'm here all day, not here, but I'm around, and I honestly would love to engage with people around this and get your ideas. You know, these are the things that we thought up. Would love your input to say, Stephen, why don't you do this? I said that is absolutely brilliant. Or Stephen, that is a rubbish idea. No one's going to use it. Brilliant. I really would love your input. I'm around. Come and have a cup of coffee with me and a chat. Yes, sir. Yes, sir.
Clients, or does this come at an additional cost?
So what we've got is, what we've showed you now is not smoke and mirrors. It's actual software that is in place at the moment. You'll see that on the last, so on our AI reporting tool, which we've yet to name. We need to actually think of a funky name for our new AI reporting tool. Temba, that's a nice name. What do you think? Lekker. So we need to name our reporting tool. So we are in the process of training the model. So currently we've got the members detailed, we've got the statuses, we've got the payment history. So as we're going, we're training the model. So these things are available, yes. In terms of releasing it to market, we'll probably enter into a beta testing phase, put it out, and we can see what the market wants. As I said, these are our ideas. We don't know if they're good or not. So, help from the industry, help from our clients, please, we welcome it. We don't want to shove things down your throat that no one's going to use. It's pointless. It's here to help everyone. But yeah, come and have a chat to me during the course of the day, please. I welcome it.
All right. Just a quick point from my side. Thank
Yes,
you
sir.
for the awesome presentation. I want
Sure.
to ask particularly on AI part, on the part of automations. I'm from a broker. We run a broker, and we struggle a lot with data wrangling. I wanted really to find out more on the automation part, using AI to do data wrangling. How far have you?
Data wrangling as in extracting data from the system in a format that's usable to you. Are you referring to that sort of data wrangling?
Yes.
So, as I said, I think it was to the previous gentleman there. Excuse me. We have these tools available. We are in the process of training them. So you could, for instance, say, in an Excel spreadsheet, give me the members whose first names are 10 characters long. It will do that for you. It's a case of us and our users training the model. We obviously won't be able to think of every nuance to extrapolate the data that's present. So it's going to be a collaborative process of training our AI model called Temba, our AI reporting tool. So again, it's in infant phases at the moment. This is what we have. I thought it was important to show everybody what we are working on. We don't just sit there and do nothing. We have ideas, sometimes good, sometimes bad, who knows. So yeah, this is where we're going. And also, what I've picked up in the industry is, it's cool to have a lovely POL 360 system, but it's the inherent data that is what is absolute gold in the system. It's your data, and we're giving you the tools how to use that data to better your business. The data is gold at the moment. And that's my story. Let's have a chat later on. Thank you very much.
Thank you, Stephen. I think we give him another round of applause there. Thank you very much, sir. We talked a lot about training the AI model. I'm keen to do my little bit of training. I can tell you without a doubt, January, Stephen, you can put this in the model. January, we're missing all the debit orders, Chief. Nothing. We're not paying anything in January. You must get that money in December, otherwise you're going to wait till March. Everybody having a good time? You guys awake? Yes? Right hand in the air. Right hand in the air, everybody. Quick as you can. Right hand in the air. Close the circle, just like that. You're going to close off the circle. Why are you looking hesitant? I'm not going to put a spell on you, I promise you. I'm not going to commit to this. Do this. Okay, fast as you can. Everybody, you're going to put the circle somewhere on your person. I'll tell you where. In 3, 2, 1. Put it on your chin. Hi, guys. Yeah, chin. Chin is, yeah. Hey! Back to school for everyone. Yeah, no? Well, hopefully we'll all have a little bit more concentration moving forward. Right now we're going to move on to our keynote speaker for the day. Our keynote speaker also representing our platinum sponsor, Sanlam, today. So we're going to have them up in a second. Before we jump into that, though, we are going to play a very short video before our speaker comes up. But our speaker, all the way from Sanlam, is Nkululeko Mdaweni from the SRM Group Business Sanlam. So we're going to jump into a video now, and then Nkululeko will come up and talk. Thank you very much.
I'm here to tell you about the final gift of love. Final? One day we will all be gone. Hey, Lara. But we won't be here forever. You need a funeral plan.
We covered. Life plans are like saving for our grandchildren. Now come. Oh, my God, dingo wedge.
Good morning, everyone. I'm hoping Lena Leon, funeral policy or life cover list online. Guys, all right, we'll get new clients by the end of the day. Warren, another finance dropout. Just like you, I'm a finance dropout, which means the industry is in trouble because finance is moving into sales. Have you ever imagined a world where a room full of actuaries or finance people start selling insurance? Who said they would be able to sell anything to anybody? I guess these are the changes of the ages. Once again, Marius, thank you so much. you and your team for setting up this summit once again. It's the second year running. We actually here. Previous year, we were here under the Incubate banner, leading the transformation element in the insurance industry. And I think that's where we were able to share our value proposition in terms of our strategic intent around transformation. Now, with this year's theme about giving back, and about giving back value to our clients, but also to our B2B clients, we felt it necessary that we should bring the entire team at SRM Group Business to come and share with you how we deliver value, not just for you, but for our clients alike. So we'll start off with a bit of context. I'm sure you do know that there's been a couple of corporate actions over the last year. Typically of our blue company, they seem to buy out everybody. But we are all here today. All the brands are still alive and well. They will exist into the middle and long-term future. And therefore, we are strengthening our value proposition by combining legacy brands of legacy, combining experience, building up 300 years of industry experience in the South African insurance industry. Who knew you could just buy insurance industry experience like that, right? So I drew the short end of the stick in terms of delivering the keynote address. We drew straws, and I drew the short end of the stick to come and share with you what we're all about, what do we have for you, but also give you some insights around what we see in the industry. I'll try not to share some of the boring parts. If I forget my lines, just know that's when I'm drinking the water. That means I'm trying to remember my lines along the way. But about SRM Group Business, we have structured the cluster according to two businesses. We've got what we call our retail business, which is the tied agency business, whereby all our tied agencies are housed. And then we've got group business. Now, that's our B2B business, where we partner with all of you to deliver value to clients. And we look after 4 brands, largely 3 legacy brands, being Sanlam, Ashupol, and Safrican, all together sharing, combining, and creating one client experience, building one business, and a diversified ecosystem to deliver value. And I'll deliver more and share more with you along the way. But let me do what I was brought here to do and share some industry insights around what we see from a market perspective. I don't know, where should I point? At myself. And some strategic industry insights about whether is the cheese still moving? Is the insurance or funeral insurance industry still growing? Or are we just churning each other's clients? It feels like we've moved into short term. The client just moves around each and every one of us. And that way it's actually a race to the floor for all of us. So I'm quite interested to collaborate with all of you to see how we can build up the value back in the insurance industry so that the end client doesn't feel like they are part of a tennis match being bounced around from one client to the next. So obviously at a macro level, we've got 2 influences that influence our businesses and how we lead them from a day-to-day perspective. We've obviously got the global economic dynamics. I understand that the global color is orange, so that's what's influencing us. You know, the increasing global instability from a political standpoint. We have one particular leader leading that instability, disrupting the market. I guess disruption does have an impact, no matter what way you choose. But at the end of the day, I guess that was the strategy to win the market. We see a heightened risk of conflict. I'm sure we've all experienced the impacts of the Straits of Hormuz last week, obviously impacting our prospecting advances on the ground and how we access our clients alike. We see global supply chain disruptions from the fuel aspect. Luckily, we got some relief with some tariff relief. That's now gone. but hopefully the government will do something for us. Otherwise, we need to find efficiencies, right? The common word. And things like AI start to come about. And battle for global power and industries. And I think that's quite interesting because the South African-born tech giant is actually trying to do that, trying to access new markets in new countries for his Starlink, and hopefully we'll see what that pans out. But bringing it more locally, what's influencing our local dynamics? I think we're all aware about the stagnant macroeconomic environment from a South African perspective. Apparently there's green shoots. We're seeing it, I don't know. I would like to agree, maybe not. I thought while we interact, we'll see if those green shoots really exist for any of you. But we have to remain resilient, right? And actually look for areas of growth. Rising unemployment, as we saw from last Tuesday, or this Tuesday rather, whereby we saw a rising percentage of unemployment in the country. We see lack of economic reform, therefore slowing down our probability of growth as a country from that perspective. But a key area that has been a key theme that has sort of filtered through as we see the middle class become more indebted. We see that clients are becoming more constrained, is the resilience of the informal economy. While we are struggling to push the formal economy and the formal economy struggles to absorb the working class, it's always interesting when you go into Soshanguve or Mamelodi and it's a hive of activity. It is a hive of consistent transactions. And it's always interesting to me how we as insurers are able to access that space. We've tried various strategies as a business and what I've seen from competitors. I remember back in the day we tried to sell through retail via the SIM card, thing whereby you'd put a funeral policy in there. That didn't work. We had a partnership in Ashupol with a former retailer as well, trying to access that market. But it's very difficult trying to sell a funeral policy between T-shirts and underwear and then talk about death. So that didn't work either. So we need to find innovative ways on how we can access this informal market that's actually very unpredictable because in our world, we want to collect premium ka January, December. You understand? That's important to us. And how we do that or how we better cater for those clients becomes important. But I think what we have missed is trying to, from an in-depth perspective, understand the informal economy. I think I myself am from Umlazi, and my wife always just noticed the difference in my tone or in my Zulu the moment I pass Harris Smith. Apparently, my Zulu changes and it becomes a little bit deeper. But for some reason, it's difficult for me to translate the culture, the nature of how we live in those communities into business. Because what we try to do as business is take our very rigid structures and force it onto clients who live differently. And I'm not sure if you see that kind of challenge for yourselves. I think the most advanced participants in this environment is obviously the parlors, because they exist in that environment. But I won't talk about the rural or the informal economy from a client perspective. I thought I'd try something different in terms of market dynamics from that perspective and focus on the micro to medium to small enterprises. Who are they? How are they structured? What do they look like? Who do they employ? Because this is a critical access point and how we need to lead our partnerships in the future. And I definitely know that some of the partners on today's sponsors definitely have that insight. And I'm looking forward to share, or for you to share that insight with us in terms of how you drive that. And we will share with you how we plan to also access that and actually develop valued solutions for those clients. right? This is the interesting part, and I think the next slide is also quite interesting. According to FinScope, the micro to small to medium enterprises contribute 80% of South Africa's workforce. Of that, the township economy almost matches those that are in the formal business economy, generating a revenue of 2.4 trillion rand. And the rural economy at 256 billion. It's very difficult to see it because of the structural nature of what the informal economy looks like. But it's actually the hive of activity that we've become used to or that we see on a daily basis. It only highlights the resilience of that market economy. But how do we deliver value in that economy in a highly regulated environment that we live and exist in, right? It's very difficult to do AML checks and verification checks with a car guy who's just collected his 2 rand and he's going to go buy a loose straw. Then you want to convince him about a funeral policy. How do you engage with that person? And how do you ensure that that person becomes a client for life? Because that's the nature of our business. We build relationships for life. I know some of us, we sell and we never see that client again, but ultimately that is an Achilles heel that we've been trying to correct from an industry perspective, and I hope we all see that. In terms of growth of this sector, the economy has been growing at about 3-4%, no, less than 1%, inflation is 3%, but this sector is growing at about 15.7%. In terms of, there are over 3 million small to medium enterprises in the country. And this is where you start seeing the conflict between what you see in the labor force statistics as well as what you see in other research documents. In terms of, they employ over 13.5 million employees, both full-time and part-time. When you bring it back to Stats SA statistics, they only count 3 million. So you can see there's a large differential between the reporting standards. And one has to wonder that what is this delta? Do we even understand where this delta exists? And do we have direct access to the delta that exists? Do we know where they are? And I think that is the solutions that we need to start thinking about as to where these clients are, because these are the clients of the future. South Africans are naturally resilient, and they have a nature to actually go up the ladder, so they don't actually remain to be stagnant without the level of growth. And these are the clients of the future. The estimated turnover of this industry is 5.2 trillion rand. This is just a, oh gosh, you see now. This is just a segmentation of the different industries, the larger industries that these entities are involved in, the largest component being in the service industry. As we know, the service industry is very seasonal. We are very consistent. How do we marry the two? The other industries are also quite seasonal, being agriculture. How do we deliver value for those industries as well? We do know that sunflower only gets farmed and harvested once in a year, and then you work for the next year again. Then you have to prepare the soil again for the very next year. How do you service that client? And those are the solutions we need to collaborate together and try and figure out. Because a lot of the time, when we talk about how do we access clients historically, it's always been about financial inclusion. And the theme has largely been about the unbanked. However, if you remember the Mzansi account, that was a collaborative effort by the banks of South Africa. And by so doing, they were able to increase the unbanked from a low level of 58% to over 80% of adult South Africans being banked. Today, they are our biggest competitor. And now we need to come together as an industry to build value chains so that we can win back the quality of our industry, because funeral, in my personal opinion, has almost been commoditized. Back. So this small to medium industry network largely trades with private customers, the individuals. And 91%, as we know, I suppose, are walk-in, walk-by pedestrians. In other words, customers still want to be interacted with on an interpersonal basis, and digital solutions do help, but I think it helps in a high-tech, high-touch environment. They still value personal interactions, and that's why our nature of our business still remains largely face-to-face, although digital solutions to augment or optimize the sales experience becomes important in our area of expertise. The rest trade with government and other larger businesses, but I think to note that a lot of them actually trade with private customers. So actually interacting with those businesses becomes important, because then how do we develop partnerships with those small to medium enterprises to gain market access and drive value through them as partners in the industry? What is interesting about this slide is, what do these entities value from a rewards perspective? And it's said that none of the insurance value chains are actually in there. So what we have done as insurance entities, we've merely taken and adopted vouchers and things to try retain the client, but we've not developed systems or rewards processes that are insurance driven to help and assist businesses in this economy to drive their business forward. Meanwhile, we see the retailers and banks driving that effort. It's actually quite interesting. You would expect this from a personal client level, but you are seeing this from an entity level as well. So 67% of these businesses actually engage in the reward systems that some of you have in your pockets and wallets today. And here's the gap. If you're not engaging and we're not providing value for this sector, and there is a huge deficit in terms of, let's call it risk protection of these businesses, then we will not be able to build the relationships with these entities. A lot of the entities surveyed here, 79% do not have personal risk insurance. Business insurance, 82%, 90% portable effects insurance, and 78%, which is a very pain point in the country, do not have health insurance. A lot of these businesses are sole props. When the head of the business goes, typically that's where you see business closure and everybody loses their jobs, unfortunately. Therefore, we need to assist and come to the party and build resilience in this market economy as the insurance industry, beyond also funeral. I caught you, I didn't press, so somebody else is pressing on my behalf. Next, we'll just touch on a bit about from the banking segmentation or the banking sector, because they understand where a lot of the spend goes from a client perspective. We need to still understand, do we still feature, do we still matter in the share of wallet of clients? Is that actually growing or are we shrinking, right? So ultimately, this gives us an indication of the demand from a client perspective. Are we still in demand in terms of what we offer? You can press now. Thank you. How do clients spend their income? Over 50% spend it on discretionary and retail. Now, this is when we say discretionary and retail, these are non-committed expenses. This is what they decide to spend their money on. Obviously, the green is what they take out on payday. You know, they pull out everything. Your debit order bounces. You see a lot of cash interaction from cash withdrawals from the banking system from the lower income earners, and you see that decrease as the income brackets start to increase up until 700,000 and above. But it's interesting to see that the discretionary portion largely remains flat. We've seen that the banks have been penetrating the market at a higher level, or it could simply mean the more you can afford, the more you can buy, the more assets you acquire, right? So ultimately, that becomes a focus area and a priority point for individuals as they climb up the income bracket segment. In terms of discretionary income, hey, look at the phones come up. In terms of discretionary income, this is basically the segment where we play in, and in red, you find insurance. Am I right? Yes. But over 50% of discretionary income is spent on food and entertainment, and you can see that stays largely stable over the income brackets. On insurance, you actually see the build-up as you go up the value chain or up the income bracket. In other words, it correlates with the acquisition of your home loan or your vehicle loans as you go up in the income bracket. Because from a lower income perspective, you largely participate in funeral, and as South Africans naturally do, they go up in, what do they call it? Upward mobility, English. They start to participate better in risk protection. Now, if we do not participate or find or interact with that client at an early stage, you actually miss the opportunity to walk them through. Because what is our value proposition as an insurance industry? It is financial wellness, right? We've been driving financial inclusion, but that financial inclusion has not actually translated to financial wellness because we are seeing higher levels of indebtedness, which means, are we really delivering the value we meant to deliver as an industry? That is a reflection point for us to consider. In the financial services sector, so if we take that insurance component and we look at what is in that bucket, in the, is it turquoise? Turquoise, that's where you find funeral insurance, gap cover, health insurance, life insurance, short-term insurance, and pet insurance, funny enough. This is an indication of the demand, because 40% of that discretionary income goes to those insurance categories. So if your partner is unable to deliver that diversified product category, you will not participate in that share of wallet. You would not be able to deliver that true value that client is looking for at all different levels of income streams. But we just need to understand, of those categories of insurance, how do you deliver to the different levels of income streams? Because somebody earning 70,000 and below, from a short-term perspective, will not be looking for, well, will be looking for modular household and contents insurance. Because we all know that 75-inch, I can't afford to lose it. Ki rekile ka bonus, and I want to protect it. And modular short-term insurance becomes important because it should be affordable, and there are specific assets that you want to cover. This is a short-term proposition that we have developed as group business, that we are able to do that from an underwriting perspective because we drive efficiency, because we leverage the large base that we have. And therefore, we will be launching a short-term modular product that will be able to cover not just devices they regularly do, but whatever component insurance that they seek to cover in their households. They want me not to go into the premium pricing, but let me stay out of it. But you're talking about price points or premium points of about 29 Rand. so delivering more value to clients in terms of protecting their needs. Gap cover and health insurance becomes quite important. If you look at medical aid, you can see at the lower levels, the percentage points are quite less. It starts to improve the higher level that you go. We all know that when you need to be admitted or you need emergency assistance at the hospital, the first 2 days are the most important, and that determines whether you live or you don't survive, and then we come fetch you, and then we pay your claim, right? But those first 2 days are the most critical to determine your diagnosis from an illness perspective. An ill diagnosis could mean the end of your life. With gap cover or health insurance by Essential Med, our clients can actually go to a private hospital for diagnosis and then transition to public because you have the right diagnosis. So access to good quality healthcare advice to get clear diagnosis so that you are not misdiagnosed and they chop off the left leg instead of the right. Right, so those are the most important things, and those are the value that we want to deliver because we need to understand what points of insurance do we want to cover for our clients and what do we want to deliver. So issues like that become important. Life insurance, pretty standard, we all do it. I think we all understand it, but it'll be interesting in the slides that are coming up next, actually where that market is moving from a channel dynamics perspective, where we are actually losing ground as traditional insurers in that perspective. Pet insurance, hey, Abo Bobi, I'm not sure, but we'll have to look at that as well. So in terms of distribution dynamics, I think we're all clear that the banks have played quite a disruptive role in our industry. Fortunately, unfortunately, the Blue Company did build them, and then they went about their merry way, and now they're the largest funeral insurer in the country. We taught them the game, and now they're off they went, and they built a formidable business. But what has been our reaction as an insurance industry? A lot of insurers have chosen convergence, in other words, trying to bring everything in-house, trying to make sure that they acquire the full value chain themselves in order to keep all the economics. Or some have actually started to or wanted to become a bank, right? That's a very long-term commitment. Others have chosen to drive efficiencies, right? Because in order to compete with the banks actually leverage their branch networks to make their products cheaper. How we need to do that is actually by cutting expenses and find ways to derive value from the existing product pricing perspective. Zaiba, man, you are staring here under pressure. So that's one of the few strategic levers that insurers have actually, leveraged and driven to drive value. But what are we seeing? Next slide. From a group scheme perspective, and particularly focusing on, and I'm giving you all data so that you don't get our competitive advantage. So if you focus on the 31st of December, or the calendar year of 31st December 2024, and you look at the new schemes and terminations, it's almost a one-to-one, right? And if you look at the same year, in terms of the premium income, it's declining by 5.9%. What that tells us is that we're just churning. We're in a competition and a race to the floor. We go take from one insurer, promise a cheaper rate, and then they move. Not really building any value, just destroying value. And when you destroy value, it becomes increasingly difficult to sell a really good value proposition, not just to our clients, B2B-wise, but to our end clients, being clients themselves. If we go to the next slide, if we look from an individual perspective, there we see a different story. These are individual interactions. This is from Asisa, so you can get it if you want it. So you actually see the growth there, in line with inflation, right? So 3.8% in policy growth, and premium growth is 11.4%. That tells you individual interaction with your clients actually drives value. In other words, maintaining your relationships with your clients, taking them through the upward mobility of the life insurance space, offering them more value, definitely then builds up your economics as a business. Next slide. This is where it gets interesting. When we look at market information, this is specific to the funeral insurance industry. You can see the segmentation by channel in terms of in-force policies from a channel dynamics perspective. Now you can see over the period from 24 to 25 quarter four, the banks have continued to increase their market share in the funeral industry, but it seems largely rested at the 25-26 market share state. The areas whereby we see some contraction are probably in the direct marketing space. I think Truecaller has taught us not to answer certain calls, and therefore we are seeing that insurance or that channel form of channel deteriorating over the long term. But what I want to highlight from a channel dynamics point of view is that other than the banks and direct online, the independent broker actually comes in third in terms of the fastest growing or the growing distribution segment. And that is the space we are forging further partnerships with. That is the space where we want to deliver more value, because even when you look at from a gross new sales perspective, apart from the banks, which grew at 2.2%, the independent broker grew by 25%. That means somehow they are finding the formula to interact better with clients. And this is why we are strengthening our broker proposition, our partner proposition as a business, because we want to partner with you to drive that growth. Next slide. If we look at what we call the mass life perspective, and I think in the next segment it talks about what funeral and life, the next growth area or whatever, I then brought in the life cover perspective, what we call the mass life, limited underwriting life cover and so forth. What is interesting, where you saw that the bank's acquisition of the share of in-force had stabilized at 26%, you can see the growth, which went from 25% in quarter four 2023-24 to 34% in the fourth quarter in 2020. I'm fine and so I'm death by slice, né? Which means this is an area they're focusing on, which means we are losing market share fast. And it begs the question, whatever happened to advice-led sales? Because it seems like banks are advancing further than tied agency, which remain flat. Advance further than independent brokers, which also looks flat. But you look at direct online, which is also growing from 5% to 12%, and the banks are actually deepening their market share. We've always, or maybe it's been an adage or a rumor in the industry that no, clients don't want life, they want funeral, it's like a savings product, and they don't want to get tested, wara wara, and therefore the sales are not going to be high or that many. But it seems like the banks have figured out a formula that we haven't in that regard. So actually quite interesting how they're progressing in that space. And we can actually see the mass life space growing at 21% annually, year on year, even from a new business perspective. So an area for us to drive value and to focus on for next slide. Now, what I want to share, and this one I'm giving away for free and give the picture. This basically looks at the competitor landscape, right? You can definitely see the first guy on the far left with 81% market share as a bank. I think we all know who that is, right? We won't share names. Number 2 is a very large insurer, right? They've also had ambitions of becoming a bank themselves. Number 3, bit of a tricky one. But 4 and 5 is where we stand. But if you combine the 2 licenses, we actually become the second biggest distributor of funeral insurance in the country. Now, how we drive that, we are the biggest supporter of independent broker lines from all the insurers, as you can see, from a funeral distribution perspective. And we want to actually build on that. We want to improve our share or market share in that perspective. Because if you take 38% of the new sales from an Ashupol perspective coming from broker networks and 16% from the Sanlam networks / South African networks, we are the largest supporter of independent broker business in the country. That's all I wanted, just to share that little part. Next slide. And that's part of our value proposition or our strategy as a group. We want to be the leading emerging markets financial services group. From a group business perspective, we want to be the leading third-party enablement partner for growth. Because through your growth, we are able to drive value in our quest in winning as one, as Sanlam in South Africa. Obviously, there's lots of metrics in there. I mentioned earlier that a lot of competitors or clients alike, where they chose convergence or efficiency, we choose to deliver value through deeper partnerships. We choose to deliver value through value-based partnerships. We choose to deliver value through value-based partnerships to deliver value to clients. In other words, to build up their financial resilience so that they can live with confidence. Next slide. Our strategy for 2030 is to fulfill more financial needs for our clients. And as I mentioned, we choose to deliver value through partnerships. In other words, we have chosen to partner with experts in their field because by doing so, you are able to enhance the customer experience of every client in their respective choice of product segment that we provide to them. And therefore, I guess you're all aware about our partnership with Time Bank. That will be a value proposition we have as a business, as we're being integrated into, or they're being integrated into the group. I think savings and investments has always been there from an industry perspective. Credit, but credit with a purpose, becomes important. Our aim is not to further the indebtedness of our clients, but to provide liquidity as they need it. Because the more our clients choose to sacrifice for their future, they suffer liquidity shortfalls and they need to be rewarded for behaving or choosing financial wellness. And liquidity solutions with a purpose become the vehicle for us to deliver that value. Protection needs, short term, as I've mentioned, we've partnered with Sandton to provide modular short-term insurance on a group basis. Very interesting. Talk to one of the guys, they are in black up there, they will be able to share that proposition with you. Health insurance with Afrocentric, as I've mentioned, we are selling health insurance through Essential Med, which got fantastic benefits as well as a group business. And obviously, wills, right? A definite need in the country, and we've got Capital Legacy delivering that value with us. And this is the value proposition, or these are the product statements that we share with our B2B partners so that they can have a holistic solution for them to sell to their clients. Next slide. And here comes our group business value proposition, as it were. through one door or one contract, you gain access to legacy brands, not just our mother brand or a trading brand being Sanlam. But in order to diversify your offering to different market segments under different brands, you have the opportunity to leverage the many brands we have in our ecosystem. Be it Ashupol, be it Incubate, be it Safrican. And one interaction with us, and we are able to deliver 3 value propositions for you as our key partner. Further to that, with our ecosystem, through our corporate partnerships that we have within the Sanlam Group, we will be able to deliver value products to your customers alike so that you can drive value in your customer network. But most importantly, gone are the days of standard underwriting agreements. Okay, let me not say something contentious. We need to start thinking different about how we partner with our B2B partners. We need to offer diversity in terms of commercial structures. And yes, we've got traditional underwriting there, as a standard. It is a basic, it is the foundation of our business, right? But we've got alternate risk transfer in terms of our cell captive offering, whereby legitimately we can actually share true value with you. You take part of the risk, we also take the risk with you, the true value of partnership, and not just on a theoretical basis, but in terms of how we contract together. But we do understand that our partners have built scale over time and actually have developed their own insurance propositions, right? We see the rise of micro-insurers in the country. We choose to also partner with you under reinsurance agreements that we can share with you because we understand that capital, especially in the initial phases of any insurer, becomes existential timber. Kana, you said in Kulego in a funny way, eh? So now that word got me. We provide that level of reinsurance to take you and actually partner with you while you scale your business at a license level. We also have franchises and partnerships, also delivered through one of our partner distribution segments. We still have our transformation mandate that we came to speak to you about last year through Incubate. What's the difference between the captive and the transformation mandate? The transformation mandate ultimately takes you from your current being through the captive up until licensing. So it's a long-term commitment with us as a true partner, and we have partners with us in the room today that probably they would share their story. I hope it's been valuable for them as it has been for us as well. Microinsurance, capital efficiencies, right? We do understand the difference in capital regimes of the different, let's call it license structures. We offer capital efficient vehicles for you to gain that efficiency from a capital perspective. And as I've mentioned, with our short-term product, we're starting to play with embedded insurance. In other words, when you acquire your short-term product, your funeral benefit also boosts. So funeral becomes no longer a choice, it becomes an obvious benefit for you. In terms of products and services, all the products listed there can be delivered unto you. We do understand there are various regulatory requirements. We walk you through that process in order for you to drive up the value chain and deliver those product segments for the benefit of your clients. Back office leverage, the backbone of our business. We have the benefit of acquiring or having 3 licensed entities within our group. What we have built, now this is now the efficiency side. A lot of insurers have basically combined back office, right? And then whether you're individual or your group, you're serviced by the same claims team. We have the benefit, we've got a dedicated operations layer as group business because we understand that sometimes you interact with the insurer on behalf of the client. and we need to have dedicated services specific for our line of business, which is B2B2C related. And therefore, through that dedicated operations layer, we are actually able to offer one client experience for your clients and yourselves alike in that regard. But a key element that we've also innovated as a business is what we call our key account department, which is like your private banker suite for our B2B clients. We are building a partner service desk. Lee, is it partner service desk? What did you call it? Yes, that. Whereby it is your dedicated key account specialist to handle any of your business-related queries that you may have, that you may deal with, offering you business development services, advisory services, rewards as a B2B client, no longer just pushing you the voucher, but actual rewards for your business alike. We understand that you also engage in market development initiatives. Also through partnerships, we partner with you on those initiatives as well, and consumer education. We call it the SRMGB ecosystem, where we bring all of these capabilities together to add value to your business, adding value to your clients. But we don't just push down services and value to you. We take the value propositions you have, and we can offer it to our other clients as well. So it's a true ecosystem because it's two-way, because you can share your skill with other entities as well, obviously driving your commercial benefits alike. So our big idea, next slide, our big idea is not driving efficiencies. Our big idea is not just selling policies down to the client. Our big idea is delivering value to you. Our big idea is to sell you an ecosystem that actually delivers value to you as a business and actually delivers value in the end to your client, building a lifelong relationship with yourselves, with us, but ultimately building value with your clients so your clients can live confidently. Thank you.
Nkululeko, thank you very much, sir. Quick number there for you guys. We've got one more section before we take a quick break. But quick number for you guys: 728. That's how many steps Nkululeko took on the stage during his presentation. I've never seen a person stride like that in my whole life. Have you got a smartwatch on? That thing is clocking, my man, hitting all the rings. But some incredibly valuable points in there. One of the things we mentioned, people don't like getting tested. Remember when we were at school, we were just going into varsity and they're like, no, everyone must get an AIDS test. People are sweating bullets, eh? Everyone's still a virgin, sweating. Oh, didn't know. Testing will get you stressed out for any reason. Another thing that stresses people out is when you owe people money and those 011 numbers start calling. Been through that. And you start memorizing them, eh? So you're like, no, not today. But then you're driving in the car with a family member and they're like, you can answer it if you want. I'm like, it's fine, I don't want to answer it. They're like, no, answer it. No, I don't want you to know that I owe Edgar's $50 for the last 3 years. Yo, that's not the one. The other thing, talking about sales, point of sales, being at the right place at the right time. I saw an incredible example of just thinking strategically the other day. Sales estate agent man, thinking about where he can position himself to make more sales. So he goes into a retail store, goes down one of the aisles, plants himself next to the pregnancy tests at the pharmacy. And as people are walking past, he said to them, well, you might need another room, so here's my card. And I think that's just a very effective and very calculated way to position yourself in the market. Right about now, as we said, we're going to quickly move on to a bit of a group discussion. So we're going to get our panelists up. We're going to have our first panel of the day. Thereafter, we'll take a quick break for some lunch. Just a quick note, I know we have the pods at the back. If you need to do any business, take care of anything at the back there, we just do ask that everybody just keeps the conversation, the volume down at the back. It is a bit of a daunting task for most people to get up on stage. We don't want people to be imagining other people naked at this point to make themselves comfortable. So let's move on to our panel this morning. Our panel is going to be moderated by Darius Weingaard from Weingaard Brokers. We also have the return of Mr. Nkululeko. We have Mr. Carl Fredericks from Rand Mutual Assurance. We have Leon Marsh from One Life and Rian Langehoven from KGA Life. If you gents will gladly take the stage. Thank you. Let's give them a round of applause as they come up. Thank you, sir.
Yeah!
Hey.
Leon?
You should have gone this guy.
Ria? Can you? Good, nice to meet you. You look smart today. Where do we sit anyway?
Kuleleko? Thank you, brother. Good to see you. Let me sit.
Oh, you want to sit in on this end?
Right. Wonderful. Ladies and gentlemen, thank you for the warm welcome. Leon, you are ready for it. Life insurance, but death insurance with that level of enthusiasm. We are thoroughly appreciative of that. Gentlemen, we've got an interesting panel. We've got some very probing statistics that we've now been made privy of. And I think I'll go straight into that segment. Let's talk a little bit about the entry of the banks outside of the statistics. What are we looking at from the client's perspective? What are we seeing happen at the end user as far as the bank's entry is concerned? Because it's been a long time coming. I think it's been going for the last 10 years quite solidly, and that ramp has been quite interesting. Rian, do you want to give us a little bit of your impressions on that matter as we move along?
I think the market is facing reality, and that is that corporate South Africa are running insurance from glass offices and not in the field like our funeral parlors are. So I think the reality for funeral parlors are that banks and insurers aren't selling products to new markets in general. I always say, if you think there's a pocket of people in Rustenburg that's never heard about funeral, you're mistaken. It's like the big Vodacom versus MTN discussion where they're stealing each other's market share more than building up new markets. So I think what we're seeing is that the big banks and big insurers are selling funeral policies to families that's already got multiple policies, which the funeral parlors have already sold to. But I think there's one thing that funeral parlors miss, and that's how well they handle the claim stage. That personal attention and empathy no corporate in any country will ever be able to replicate. And I think that's still the advantage at funeral parlor level.
Leon, is it a case of another debit order? You know, getting the feeling here from Rian, it sounds a little bit like the banks are distributing well but are somewhat removed.
Yeah, so I'm going to give you my take, and I'm talking as just a South African who looks much younger there than I am here. But I have the experience, and I'm going to be brutally honest. I think we have allowed banks to step in is because us as insurers have not stepped up. I think us as, from a distribution perspective, have not stepped up. I think banks understand their clients very well, better than us. They know when people get paid. They know what the people are spending money on. I think we've allowed it to happen. I think where the key is, and I'm going to call us out, I think as an insurance industry, I don't think we've gained the trust of policyholders, of South Africans. I think there's a mistrust. And I think that's where banks have stepped up where we haven't. And they've taken advantage of it. Banks are by default trusted. Your salary goes there. And I think it's up to us to change that methodology. I think from a broker, a funeral parlor perspective, there's a lot of trust in the community. But I think us not being involved has allowed that to happen. The stats that we saw earlier.
I think that's somewhat telling as well. Carl, when we talk about banks having taken up a large portion of the insurance market, specifically in the funeral and the death care industry, and on the other side we've got the brokers who are actually doing surprisingly well. The insurer has suffered. Is it because of the lack of trust? Is it because of the ease of distribution? What are your thoughts in that space?
Thank you. I first want to challenge the idea that the banks are doing well in this space, because I don't think they are, right? If you look at in Khululeko's presentation earlier, we're seeing a market share of about 20%. Let's call it 25%, right? That's still a 75% open market opportunity for us as insurers and this space to step into. The big thing there that I think we need to challenge is that the banks are doing the exact same thing we are. So as much as Leon is accusing them very nicely over here, they're doing what we do. We're attaching ourselves to the same salaried, employed peoples, leaving that 80%, 75% of the market completely open without any real solutions to it. Who are the solutions to reaching those markets? The people in this room, not the bank. The people in this room are in community and have relationships that you can never have with Mam Kumalo. No way. There's no way a bank can have that same level of relationship either. So I don't know if this is as a big a problem as the insurers are putting it out to be. I think that it's a bigger opportunity if we just stop solving solutions or problems with the same old solutions.
So in the theme of the future of the funeral industry, Nkululeko, you have a lot of statistics. You also have a lot of infrastructure, and you've got the legacy. What do you foresee at policyholder level from a new developments perspective, considering the changes in the market and the efficiencies in the market? Do you expect anything radical, or are we going to have the same old, or are we looking at a shared value kind of a system? Because that seems to be moving to the fore at a rapid pace.
No, I think a very good question. So maybe if I start off with what the banks did, and I know there's been quite a focus on them. I think all they did was play to their strengths. Because they understand that the client comes to them for liquidity. You come for a car loan, they offer you car insurance with that. They don't market all of this insurance stuff that they sell, right? It's not actively done. They just play to their strengths. We just need to play to ours. Because I think you mentioned the 26%. It was all fine and good when they were growing and everything was working well. I think the position changes when you start to get a coffin in your branch, right? Then the realities of funeral insurance start to get real. But I think they just play to their strengths, and we haven't played to ours. That's why I mentioned, why do clients not come to us for the right advice for life? Why do they not come to us? Our motto as an industry should be about financial wellness. And if we paint that and we focus on that going into the future, leveraging on our strength as an industry, but then byproducting that with whatever they sell, not as a key proposition as an insurer, because we're not specialists in that space, but adding the other value propositions to that to build value for our clients on an advice-led basis. Because our tied agents, brokers alike, parlors alike, are the most trusted people in the communities. I would not be able to go sell a funeral policy in Mamelodi, but I'll probably be successful in Mlazi because I'm known. Yeah. And that's where my background is. So I do think the future of insurance or the industry is us coming back to our strength on a true advice-led basis and not product pushing, and actually taking the client through their life journey and being involved. That's where it is a long-term game. There's no quick success stories. The 300 years is not built over 5 years, unfortunately.
Understood. So expansion perhaps prioritized through broker-led distribution and personal relationships. How are we finding the old adage of cutting the middleman out? How is that competing when it comes down to the metal? Because that was how the direct insurers found their footing in the first place. And I think we have a slight problem here, making a bit of a blanket statement, in that typically the policyholder isn't there to enforce his policy or her policy once they've passed on. And so they just kind of take what they can get. Do we see any or foresee any issues as legislation is tightening in that space? It's actually somewhat over-legislated where it becomes quite challenging, or are we looking at more entrants in the servicing side so that advice can be brought to the fore at a more rapid pace? Anybody with an opinion on that? Carl, you look like you're ready.
Sure, I'm happy to go. Look, if you look at how much of business in South Africa from an insurance perspective is intermediated, it exceeds the 50% mark, right? So even to start talking about disintermediation means that you don't have your finger on the pulse, something is off there. From an intermediation perspective, and maybe the problem is the way that we have been thinking about intermediation. We've seen intermediaries as mostly a distribution solution, when they can be a far more effective value chain solution, right? So look at claims management, administration, look at the entire value chain. And then maybe the other thing we need to start doing as industry and intermediaries need to challenge is, why are remuneration models structured on sales and new business? Why are they not structured on retention? Why are they not structured on client outcomes, on claims outcomes and achieving retention metrics and the like? I'm in favor and in support of intermediation because intermediation is the future of business. Because calling them the middleman is silly when you're trying to facilitate a relationship with an end user you don't have, but that person or that intermediary does. My major challenge would be, we need to start thinking differently about these remuneration models and how we use intermediaries just as an upstream sales and distribution partner rather than a complete value chain and the complete downstream offerings as well.
Leon, what's your opinion on the brokers, the tightening legislation, and what Carl has just told us? Because it sounds like a very big challenge, this wave of change, of compliance, of regulatory tightening, of FSCA violence against intermediaries. What are your thoughts on the future of that market, and what is the industry doing to potentially assist your township broker, the person who's got the relationships, the person who's got the long-standing involvement in the community?
So I think as a starting point, I think we should put it out there that I think any regulation that is put out there for the right reasons. I think if we're all clear on that and we understand that, I think the point of departures is good. And if we accept that, then we need to accept why has it been put there, okay? And I think from an industry perspective, we do bring a lot of this upon ourselves. I think, and I'm just talking on behalf of everybody up here, I think there's regulations are put out there, but I think there's an onus on us to make sure that the guys on distribution, the guys that own a funeral parlor, the guys that collect a premium, really truly understand what those regulations are. I think it's an onus of us to put it on them. It's all good and well, for example, to have a compliance officer. That's not going to sort your distribution out. It's not going to bring in your money, but you have a reliance on that compliance officer. I think, again, we kind of have done it to ourselves, but I think if we be open and honest and we engage properly with wherever the distribution is, wherever the client-facing person is, in other words, the potential policyholder, the policyholder, if we engage them like adults, I think we can take this further. I don't see regulation as a threat at all. I think it's because of the purpose of it is from here. It's from a right place. We just need to make sure we educate. When I say educate, I'm talking we need to educate parliamentarians. People need to understand, government needs to understand, regulators need to understand what the market is like. It's our responsibility to contribute to that. It's our responsibility to make sure that the guys selling really do know what is going on. They really do know the risks. From a commerciality perspective, we need to be more transparent. Regulations will take us there. Regulations will look at commission. Commission is the second, fees and commission is the second biggest, highest component of a premium build on a policy. And I think we need to be honest, if we are going to add value to policyholders, we need to look at that. And we don't want government or regulations to force it upon ourselves. I think we need to, again, honestly look at how we approach the market. I don't see it as a threat. I think it's to be embraced if we do it correctly.
I can maybe add to that.
Yes, by all means.
I think in general, I've found that in this industry, I'm not from insurance, I joined 12 years ago. So it's always interesting to me how people are led by legislation, insurance, but forget good business principles. If someone is adding value, they should get commission. If someone treats a customer or a client, family with empathy at claim stage, help them through the process rather than send them to a big corporate, you deserve commission. But if you're selling thousands of policies, walking away for the next big deal, then you don't deserve commission. So my approach has always been business first. If the deal doesn't make sense, I walk away from the deal. It's as simple as that.
You mean client first?
I mean adding value first.
Okay.
And then you deserve commission.
Yes.
I think that goes without saying as a part of a process, is that if the product and the value and the service offering is increasing in its rightful application, it's being well applied across the board, it's now better off because it was distributed by somebody who understands it. The family has the personal connection of being chaperoned through a very difficult process of death care. You have a lot of value being added. And so it actually leads very nicely into a segue about technological changes, AI, and systems-driven, operational, miscellaneous administrative assistance and heavy lifting. Are we seeing policies coming down in price or going up in price? And should we expect that because you are becoming more efficient, so should the costs and the benefit structures, or are the consumers disillusioned by this hopeful wave of change? Nkululeko, do you want to take it away for us?
I think the first important value add for technological advancement is actually ease of doing business with the client. You want to give them, they live in a fast-paced world, they don't have time to fill in 5 pages of forms, you want to give them that ease. And that client experience becomes the first entry point, especially to engaging with the client. But from an operational perspective, in order to ensure that you are able to deliver value, you always need to drive efficiency in the background. It doesn't necessarily translate to the front-end premium, but it ensures sustainability of the book as you build it going into the future, so that you can actually develop more products to create more value for the client, because that's how you'd actually build value for the future with the client. So ultimately, yes, we're seeing AI coming strong in the back office, but also in the front office, which is very important for the client. I mean, with our iManage Pro system, the agents or the brokers are able to simply enter details of the client, and the system is able to build a profile for the client and offer the best solution. And that's actually one way to actually fast-track the in-sale or point-of-sale experience of the client, so that you're able to offer them the best advice and the best product for that they're looking for.
Would I be correct in saying that the trade-off is actually in the efficiency that increases in the policy administration and the structuring, the nature in which we're able to apply, work, speed of execution? Is that where we're seeing the efficiencies at this stage?
So where you actually want to see the efficiencies is faster delivery of service to clients, right? So ultimately, one place that you want to see it happening is when there's a client query via email. You want to have an AI generated that's able to solve the easy FAQ kind of questions for clients without having them holding on the line for 5 minutes just to speak to somebody. You want them to be able to receive their claim on time because the burial is on Saturday, and you want to make sure they're not hindered as a result of that, unless there are issues in the claims process, right? So a lot of our processes historically as an insurer has always been manual based, and driving to a more efficient environment actually improves the client experience, and therefore adding more benefit to the client in terms from a service offering perspective. Yes, you do drive efficiencies, but technological changes are costly to implement, right? So you do see that cost filtering through on a year-on-year basis. So it doesn't mean the moment you implement the tech, you get the benefit on day one. It's actually a 10 to 15-year benefit realization journey, but all done with the primary focus of building value and service efficiency for the client so that they can choose you in their daily life.
Darius, can we offer a supporting view here that I think is quite interesting?
So to that exact, to probe a little bit and get the insights from our panel as well, what are your thoughts about the statements that Nkululeko is making? Nkululeko is making. I completely see the business case. I understand that. It is a longer And the worst thing about this current age that we're in is the moment you've almost mastered one version of a AI bot or an efficiency that's come to the fore, the next one is on the horizon. Carl, what are you thinking? Are you in support? Do you agree completely? Do you have supplementary information for us?
In a typical millennial, I'm all in support of AI, no surprise there, right? But ultimately, and I agree with Nkululeko 100% in that a lot of efficiencies are being built from an operations and servicing perspective. I think the thing that the industry is not seeing yet is that, yes, these efficiencies are not yet translating to premium costs. They will over time, to Nkululeko's point. And when we get to that point, what do we all do? Race to the bottom even faster on price than we are currently? Because it's amazing that it's helping us build efficiencies for servicing and for operations. Unless it finds meaningful translation in our actuarial and pricing models, that doesn't put us in this position where we're outpricing each other by a couple of rands in order to win business, is ultimately the real challenge for us, is how do we stay away from that race to the bottom that tech and AI is going to inevitably enable for us. I think that's a very interesting conversation, and I think it's going to cause lots of controversy between us if we don't find a way to make this work.
That seems to be the problem with efficiency, is the more efficient we get, if the market keeps demanding price reduction, we end up eroding our own margins and our own profitability, but worse off, our own capacity to expand and further penetrate into the markets as well. So we actually have a almost shrinking budget that we have to do more and more and more with over time, including the idea that new entrants are coming in. They are leapfrogging all of the systems and processes that has been built over time, and now we see that even in the short-term space, where completely disintermediated, you and the machine talking about your necessary covers for yourself. In that space, I want to probe a little bit about value-added products within and then shared value. We've seen some very interesting retail solutions to funeral cover that are attached to all sorts of products being purchased. Is that a direction that we expect to continue? People following this idea that one product must have multiple touch points and multiple benefits, or are we looking at a position of potential saturation where people are drawing back and saying, can the product just do what the product is supposed to do, and the rest of those things we'll find on our own? Thoughts, open panel?
Maybe I'll jump in there.
Leon?
You used the word earlier, like same old, same old. I think that's that's a good way to explain, well, for myself, but a good way to explain insurers. And I think we're moving past same old, same old. And I think that even in terms of funeral cover, I think there will always be a place for funeral cover. It's as South Africans, it's our first go-to entry product. It will never ever change. I think from an insurance perspective, we're not looking at the final destination as a payout, as the point of a policy, let me put it that way. I think everybody is moving towards some sort of living benefit, and I think that's important. That's additional value that we do add to policyholders. But I think South Africa is transforming. Even the way we look at funeral cover. People take out funeral cover because it's simple to understand. We trust it, we know it. Where the move is coming from is not just additional products. We need to get to a point where we are not same old, same old. We need to look at life cover. South Africans want life cover. So we do not take life cover because we don't understand the small writing. We try and make it clear and understandable, but we don't present it like that. It makes it difficult for the guys in the room to sell a product efficiently because of that mistrust and the misunderstanding. We as an insurance industry need to provide product that's basically like funeral, which is life cover, which is that simple to understand, pays out as fast as funeral. That's where we've got to get to. Yes, funeral cover is what it is. The way we handle funerals may differ. I may end up in a flower pot when I pass away. The way we bury people, you guys will know, is changing, and we need to change with that. But I think the fundamentals of how we view how South Africans take it out and what we offer needs to change. We can't have complex lifestyle medical blood tests. We are excluding people from the insurance industry, and we're driving people to funeral only. And that's something we have to look at as well, not just the additional benefits, which I think everybody agrees needs to be there.
Maybe.
That's a very interesting point.
It's an interesting point.
And let's explore.
What do you think about remuneration structures that actually take people away from life cover? I think that's a contributing factor. I think from a product design perspective, life cover has gotten so simple. There is limited underwritten life cover, right? But the truth is, distribution of life cover versus funeral, I can do 3 clients while I'm doing 1 life cover possibly. Maybe that's part of the reason, because we know what the margins look like. That's why I say we've lost our edge from an advice-led perspective to a volumes. We understand insurance is a volumes game, right? We're pumping numbers. But in that drive, we've lost the advice-led kind of advice, meaning that you don't spend time with that client. You meet the client the first time, you sell them the funeral policy. That might have been the point of interest, but you never go back and sit with the client again because it is a long-term investment. But I do agree that, I mean, we're seeing it. The banks somehow are doing it, and maybe they've got a way on how to distribute. Maybe the guys are not, don't have such a complex REM structure. But I do think REM drives the attitudes and the culture out there to some extent. That's just my personal view.
Let's talk a little bit about trends. Social media has arrived, and the bigger the better. Are we supplanting adequate life cover with extravagant funeral cover? And where do you see this going as an eventuality? Because we're losing space at on the plots as far as the funeral availability for you to put your coffin down is concerned. People are changing the way in which a funeral is being perceived, and it's being seen as a exhibition of a send-off. It's become something very extravagant as well. Where do you see the trends taking us as we progress? Shall we start on our millennial at the end there? Kyle, what are you're looking at me with stars in your eyes. Tell me something.
I think from a trends perspective, what's very interesting is, and Kululego's made this point a few times in this panel about being advice-led, right? And you're starting to see that consumers are wanting to have more of a relationship with the person selling them insurance and helping them make decisions across their life cycle. And that's the point where you're now starting to see very interesting life insurance products come to market and basically come alive. For me, the challenge and the problem is, and as much as the remuneration problem exists, the problem is still in product design. The problem is, even though cemeteries, so in Joburg, I was doing some stats for this preparation, 90% of cemeteries are full in the city of Joburg. Only 5 cemeteries are currently accepting new burials, right? But we have product designs and product structures that were sold in 2010 and that are still structured to traditional burial models. So how do we think about product design that thinks about aquamation, cremation, those sort of things, without penalizing a client at the end of it, right? So if I'm a client that is going to choose cremation, which is cheaper or more expensive than a different option, I shouldn't have the burden of cross-subsidizing on somebody else's benefits. I know what I'm saying is basically challenging insurance as a model, and I think that that's what we need to do. Because ultimately, at the end of the day, the best thing for South Africans culturally would mean to respect cultural norms, but also to create an opportunity where these cultural norms are evolving and changing. So if I am 38 today and I was sold a policy in 2010, but by the time I want to be, or by the time I die, I don't want to be buried, I want to be cremated, I want to be aquamated or whatever that is. I think product design needs to enable that without penalizing me for the choices that I have to make, also without penalizing me for the cultural norms that I'm forced to exist within, which is a very big consideration for South Africans.
Leon, you look like you've got something for us.
Yeah. Look, we know it's happening out there. The municipalities, we've got places where you're now forced to bury more than one individual in a grave, so we know it's a problem. We've seen private companies now obviously purchasing plots of land, redesigning for burial. So it's out there. We're seeing new trends come out. We've got the millennials, like I said, wanting to be planted in a flower pot. That's great. It works for somebody. I think the moral of the story is there is a cost to every funeral. It's an immediate cost, as a requirement. You need it now. I think the value differs. And unfortunately, in South Africa, as we said, the extravagant funeral is a status symbol. Rightly or wrongly, it doesn't matter, but the value is very high. I need to show I have a deep respect, and I do spend a lot of money. I think we can all agree that that price should come down, and the price can come down if we are pricing for different things. If a cremation costs different to a traditional funeral, where you have a blowing device and you've got a hearse and you have a tent and a mat and all the stuff that some of you guys do provide, we need to price accordingly. And I think it's part of the planning when we're engaging as a broker, as a funeral parlor, is what does that end point in your life look like? But also being cognizant that it's less about the person who's being buried, it's actually more about the person who's going to receive the funds that we have to consider. The private cemeteries, good and well, it's a requirement. We need the space. Is it necessarily where you're from Umlazi? Did I get it right? You know, it's great that he wants to be buried perhaps in Umlazi, but maybe his kids might want him up here where there's a beautiful place near FMB. But I think we need to change, we need to adapt. But as part of that, how we're engaging the potential policyholder, from a parlor, from a broker, from an insurer, whether it's tied or whether that distribution looks like, it's a problem. It's not going to get better.
Can I maybe add something to that?
Rian, by all means, what are your thoughts?
So what's interesting to me always from a business point of view is entrepreneurs solve problems. They're not going to wait for a municipality to solve it or for an insurer to solve it. We give our clients so much credit because this trend has been going on since COVID, and we see funeral parlor owners solving it by pushing clients to buy different products like cremation, by preparing the family for that eventuality. They don't wait for the problem to arise on the day and then try and solve it. So we find that funeral parlors is already solving the issue with what they sell, how they help clients prepare by buying grave sites well in advance. So a lot of the solving is already being done on ground level, we find.
I just want to take us back to the future. Are we looking at efficiencies outside of our own businesses? I know in various types of insurance, we're looking at the end provider as well. So are we saying this is the reasonable rate for a funeral of such a nature? And are we looking at that as the future of insurance? Or what's the pace at which we can expect that people are being more individually underwritten instead of being cross-subsidized, but also the auditing? Because we found that your parlor or the funeral home will come back and say, so how much is the policy? And then you'll say, 25 grand. And then they'll say, okay, this is what you get. And the next guy will come in and say, well, 35 grand. And they will give them the same exact level of treatment potentially, or even the one that's ignorant and comes in with the 50,000 that was given for their funeral. So are we looking at that side as well at all? Or are we just focusing on the member and their family and giving them the bucks to spend at their discretion? Because we're under pressure. You've got a couple of days, you don't have a lot of opportunity to make different decisions. You go to a place, they tell you it is what it is, and you've got to get it done with. Thoughts, panel?
My view is partner-led relationships. I may be from Umlazi, but I do not understand the costs associated with conducting a funeral in Umlazi. My parlor will.
Yeah.
My parlor will understand, or my partner will understand how much is a cow that needs to be slaughtered. They will understand the traditional processes, whether inyanga yadingekala or not, because they are intertwined with the community and how the community reacts or behaves on a cultural basis. And it's important that we take the advice from our partners as we build solutions for the communities, because that is the future. I think the mistake we tend to make is to build one product and force it down everybody's throat and think it's going to fly, whereas everybody's diverging into their own cultural, individualistic kind of requirements. And that's where partnership comes into play. That's where you plug in partner-related solutions as part of your value proposition, delivering the right proposition for that right community at the right time. So for me, the future of it becomes partnership instead of a big brother dominant relationship pressing down your rules to your partner to deliver to your client.
Like that take. Thoughts, Kyle, Brian?
Yeah, so
Leon?
I think there's three things that stand out for us. And again, remember my learned colleagues to the left and right is always approaching it from an insurance point of view, which obviously this is what we do. But we always wave the flag for the business owner. So when it comes to relationships, partnerships, value creation, you will find that in every spreadsheet, every PowerPoint in the world with any corporate. But here's the question that I always ask our clients. If your current intermediary agreement talks more about cancellation and suspensive points than how are we going to win as a partnership in the industry, then that's not a partnership. That's something. It's a contract, right?
Yeah.
So again, coming back to price. So we use AI models to firstly reduce our own OPEX. But we don't tell our clients about that because they don't care. They've got their business to run. So the question we ask, by the way, we've reduced the OPEX by 70% over the last 5 years, but not only AI, through re-engineering all the processes. So KGA, May this year, is our 40th year of only doing funeral insurance. So we think we understand what a funeral parlor smells like, wants to do more than most corporates. So when it comes to price, we never dictate to our clients what they should do. How do we know, sitting in a glass office in Stellenbosch, what someone in Rustenburg wants to pay for a policy? The funeral parlor has been doing that for however many years. They understand that market. So how we use technology is to help our clients. I'll give you a practical example. If you submit a claim with any funeral parlor, I was at a client in Soweto this week, seeing it in first hand. That wasn't a client of KGA, by the way. And the person comes to the claims desk and guess what? Here's the list of 8 documents you have to go find and certify, right? Because that's what the insurer wants. So what we've done is, and this is not the last year, this is now over the last 3 years, we've developed a process using AI, amongst other things, to process claims with one document, which is an uncertified death certificate, processed on a system, not on an email with attachments, and we process claims on average at the moment within 7 minutes. So while the policyholder is standing at the funeral parlor, they get the message, the claim is approved. And why is that important? Because now you're using technology for a better experience.
Yes, yeah.
But also, we always look at our partners. So if we pay claims within an hour, let's say, the funeral parlor's made the profit on the funeral before they've done the funeral. So that's how we use technology, is to help our partners win rather than telling them you have to use AI. So we use a lot of AI to develop tools that really make a difference on ground level at a funeral parlor. We don't tell clients to go use this AI bot or that because it's complicated. So AI has definitely put more technology in the hands of smaller businesses, but we found smaller businesses still don't know how to deploy it. So that's our relationship with our clients. We'll build the tools, we'll buy the tools and give it to you for free because that will help you win, rather than us telling them you have to sell at this price or do the funeral at this price. So we see ourselves as real partners and winning together rather than dictating to clients and then call it a partnership.
Any other burning statements you'd like to add?
Yeah,
Let's go, Leon, then Carl.
Can I jump in? Yeah, and I think there's 3 things, and I think it sums it up. I think if there's partnership, we understand that we know our industry, we've got clever people who price, we've got amazing technology that'll analyze and scrutinize and prevent fraud. We need to solution the right solutions, but it's more than a partnership. In my world, it's simple. There's 3 entities, and if you balance that, you're in a good place. And it's the person facing the client is key, the insurer is key, and the policyholder is key. I think if you get the right balance between all those 3, you're going to get to the right place. You're not going to have a extravagant burial where it's perhaps not necessary. Maybe you can get away with less. It's getting the balance between what the policyholder requires what's required from a funeral services industry perspective, and I think from our side as well, we need to do what's right. We need to treat people
very
fairly.
much. Yeah, absolutely.
It's key. But those three people, or those three entities,
Prioritize them.
if that's in balance, we're in a good place. And I
Love
think
that.
that's our challenge.
Carl?
I want to add on 2 points to this conversation, right? So I think the first point is that there is a significant gap in South Africa between cover that people have and the actual cover that they need. KPMG, they assume that gap at about 50 trillion if you think about what South Africans have cover for and what cover they actually need. If you look at that in juxtaposition of premium growth in the industry by 1.5%, maybe 2% year on year for the last couple of years. That's not a resilience story. That's a stagnation story, right? And we keep selling ourselves that it's a resilience. We have such a resilient insurance industry, life, particularly funeral, that's keeping this alive. But at 1.7, 1.5, whatever the percentage is, growth year on year, that's a stagnation story. Now, what needs to change there is that design from a product perspective needs to start looking at filling that gap, the 50 trillion gap. And a lot of that gap exists in funeral and life insurance. I'm not talking about new insurance products. I'm talking about what it is people actually need from a funeral perspective and a life perspective, and how to meet that. And then the last point I want to make, and what I truly think will change, is the point about partnership. I think distribution will significantly change over the next 5 to 10 years. I think we are all being glazed over the eyes right now in terms of digital and direct channels and AI and all of these new sexy digital no human intervention models. And I think they have a short-term lifespan, and I think they're enjoying some success now. But what is really growing from a trend perspective is embedded insurance, right? So putting insurance in places where clients already trust the relationship. And that, no amount of direct or digital or fancy digital brochure is going to achieve for you over the next couple of years.
I have to add to that.
Okay,
Do you mind?
Leon.
Do you mind?
As we wrap up.
So guys, and the number that he's mentioning there is important. It's 50.4 trillion. Guys, it's 5 with 10 zeros. That's an indictment
Guys,
of us sitting here.
The crowd and the mic control at the back, can we just increase the volume, please? And then those that are in discussion, please just lower your voices a bit, please. The crowd is struggling to hear.
This number is big, guys. It's 50 trillion. That number grew year on year by 12.5%. That means you and us are not doing what we need in South Africa. That's the amount of insurance required by people of South Africa. It grew by 12.5. That means we're not doing anything. That means we're keeping, either we're not getting the product right, or we are not selling right, or we just don't have the right product that people feel they can interact with us. And that's so crucial. I think the opportunity here is not just funeral. It's 50.4 trillion is massive. We have to step up.
So we're rounding up now. I actually think we need to go and do an aside and have this conversation for over a dinner or something. But we're going to be taking a few questions from the crowd shortly. In summation, in one sentence, what are we excited for in the near term, close to mid-term future within the industry? Nonkululeko?
Partnership by diversification to drive value. That's it.
Jan?
I think proper partnership alignment is important to me because everyone doesn't have an iPhone. Everyone doesn't have a Samsung phone. One insurer is not the place for everyone to be underwritten by. And I think partnership alignment that will give you as a player in the market an advantage for your business, not for all businesses, I think that's key.
Jan?
Let's reduce that 50.4 trillion by getting 3 things right: looking after the person selling, the insurer, and the policy holder. And we sorted. I'm super excited. Super.
Al?
I think client ownership and trying to force yourself as the owner of a client is the thing of the past. I think the best possible way forward is multidisciplinary teams that service an entire value chain. So if you are having conversations today arguing about my client, not your client, you're playing a losing game.
I think we've got an exciting future ahead, and I can't wait to see what this conversation looks like at next year's one with 1 year delayed statistics from Nkololelo as well, so we can compare them. Thank you so much for your time and effort. We'll open the floor now to the panelists from the floor. Do we have any specific questions that you're burning to ask? We ask that you try and keep them concise so that they can answer exactly the question that you may have. There's 1, 2, 3 on the right-hand side of the stage. There we are.
Good morning, everyone. I'm Sandy. Well done to the panelists. This is a very emotional discussion to be shaping right now, given all the ecosystem challenges that we face with. I think two things from my side. One is that it would have been nice if there was a rose amongst all these lovely gentlemen, because I think women are playing a more active role in the funeral space. And I think this is such an emotional topic, and we have focused so much internally. Almost sounded like Eskom going back in the days when load shedding was a huge thing, because we suddenly had blackouts. And we are talking about technology. We're talking about internal breakages and processes. We forgot the human aspect. Funerals are changing to hybrid, to digital. How are we shaping those personal journeys for those families? Thank you very much.
Yes, sir.
Morning, and thank you so much for this informative session and to the speakers. My question is, we spoke earlier about private cemeteries and how they're coming up. I just want to check what you know. Why is there not so many being developed in the country? I mean, you mentioned, I think Kyle mentioned, there's only 5 that are taking in new burials. I just want to know your thoughts. Why is this not happening? And if I can maybe push a little bit further and ask, because we are developing one in Pretoria, but what I want to know is, do you think South Africans are ready for a structured, let's say, funeral procession at the cemetery? Because if you've been to a municipal gravesite, I'm sure you know what happens. Because a private one would be a lot more structured, which is what we have in mind. We've already put things in place. So I just want to hear what are your thoughts, and maybe I'm matching you to the wrong direction here, but yeah, that's my question. Thank you.
I think answer to the first part of the question.
Okay, Rian, if you'll hit the first, and then I think Carl was quite passionate about this as we were speaking. You'll take the rest. Rian, go for it.
So the blockage in terms of developing new sites is an economic problem. If it was easy, simple, profitable to do, everyone would have done it, and that's the answer. The problem for the developers are you have to be able to look after that site for 100 years. So it's a long-term commitment. Plus, the startup cost is enormous, and the volumes in the beginning are low, and that's the business answer to the question. If it was easy and simple to do, a lot of corporates would have done it. But there are new developments that we're aware of all over South Africa, but those companies have got very deep pockets.
Carl?
So to the burial question, I think there are real material problems to making this business model work, right? The first is that you actually need to meet regulations and legislation around this stuff. So talking about things like environmental impact assessments, you have to do community participation or whatever. So from the day you decide you want to open a cemetery to the day that it's open, we're estimating 5 to 8 years. Because of that process, right? And many millions that you would have sunk by that point. So is it a losing game? No. It probably means that you need to start applying yourself to the future of burials and the future of funerals in South Africa. Cemeteries are still going to be required, but beyond that, aquamation is still becoming a thing. There's only one parlor in the Gauteng area that does aquamation today. but it's a big demand from a requirement perspective. In terms of cremation, you understand the challenges there also similarly. But I think if you're looking at a legitimate burial solution, you unfortunately have to work with the processes and the mechanisms that are in place. So you are going to be doing public participation until you're blue in the face. You're going to have to do environmental impact assessments and the like. And then the thing is that it's short-term profit, right? So once you have a cemetery set up, people pay for a plot. You can't sell a plot once it's sold. It's done. So another way to think about it is thinking about taking up cemeteries that already exist and starting to think about family burial plots. And these are international trends where families are starting to be buried in the same plot, looking at different ways to move forward here. Does that mean it's going to be easy for us culturally, given that we are South African? No, but we've never shied away from solving a problem, right? Thank you.
Excellent. There was another question in the middle there. There you are, sir. If we can.
I think you've missed her question.
Yes, thank you very much for this very, very informative session there. There's just one point that I'd just like us to expand on, especially looking at that 5 with those many zeros, Leon, that we need to cover. We have a very young population that's coming up. A lot of people coming into the job market, a lot of people that probably are making that 5 with the zeros grow. What are we doing as an industry to attract this young crowd that's coming up, very knowledgeable, very tech-savvy, and maybe not so much connected to the funeral parlor itself? What are we doing to grow that? What are we doing to make it sexy? Thank you.
Can I
take us, Leon, go for it.
Yeah, can I take this because I've pushed out all those zeros? I think there's a number of things we can do, and it's talking partnerships is one of them. But I think, and I'm generalizing, as a general statement, the insurance gap is typically because of old people that look like me. You get to a certain age, and you need it. So at one point you don't need it, but we need to understand this. South Africa is changing. The reason why that insurance gap exists is 2 things. We didn't have the right people talking to people, but culturally, it's not been something that South Africa has grown up with. We need to bring in young people that are selling, that are advising, and they're advising young entrants into the employment market. That's what we need to do. We need to get the right people in front of the right new employees, and we'll start making an impact there. But the biggest challenge is, like I said, we've created hurdles to entry. Something as simple as a lifestyle question for somebody can be the difference between I want a product, or I can get a product, or I'm not going to even enter into that realm. So a lot of it is we've created underwriting lifestyle questions and the wrong people trying to sell wrong product. We need to fix that, and we'll take care of it. The opportunity is great, 12.5%, it's massive.
Can I just go on that one?
Yes, by all means.
I think I got my funeral cover when I was in varsity. So young people do participate in the funeral insurance product segment. I think where the challenge comes in is trust that they'll actually get the benefit in the end.
Okay.
I think with all the developments that we try to block against fraud, all of these checks, it actually takes away the trust, and you lose that trust surplus with the new generation. Therefore, they'll rather just save the money because they're a bit more financial savvy. They'll rather just save the money and perhaps build liquidity to solve the problem. Sure. But I do think that the youth do participate in funeral insurance. We've just deteriorated the trust surplus that we will settle that claim when they need it.
I think with that, ladies and gentlemen, we've run out of time on our panel. Temba is about to escort us off stage, unless Temba has a question for us.
I was about to throw you guys off the stage, but I just thought, I don't know if we got closure on the first question, which was regarding our relationships. I think it was tech and the relationships, looking after. Yeah, I don't know if you remember that question or if we should.
It was to do the emotions.
Yeah, it was to do with the emotions and particularly about how are we shaping personal journeys in the face of a changing funeral insurance business. Correct. Look, we were speaking about the efficiencies and the way that we're thinking about business and the way that it's shifting, materially changing in the way we're building servicing and efficiencies from an operations perspective. I think what the solution here, and this is going to be a shocker because I'm for once not saying it's in product, I think the solution here is in customer experience. I think you need to design journey maps and customer journeys that make sense to the experience that you are trying to achieve from an objectives and an outcomes for a family or an end user at the end of the day. Our current, if you look at insurance customer journeys, they speak very much to the insurance value proposition. They speak to how do you as a customer journey your way through our ecosystem. And I think what you're asking us to do is think about how do you as a customer journey your way through your life cycle and how do we support that? Absolutely.
Wonderful. I think with that, ladies and gentlemen, thank you panelists for your time and your effort. I think we're going to grab a quick picture. Great.
Ladies and gents, as they take their photo, just a quick note for everybody, we're going to take a short break. I think we're going to keep it to about 15 to 20 minutes. I will call you back. I'll be walking around with a stick and chasing anybody who takes a while. After the break, though, we're going to be talking about payments, the future of payments. We're also looking at the future of compliance. And then we have Mr. Sham will be up telling us about the most valuable skills that we can use in a changing world. So that is all coming up straight afterwards. But for now, have a quick break. Last thing also, if you haven't used your QR code, I've been connecting with some people. I've sent some emails, which will end in invoices, I'm sure. So make sure that you go connect with people, add them to your database, and continue collaborating. Thank you. We'll see you in 10:15.
Meet Anele, founder and CEO of a funeral administration platform. She wanted modern smart terminals that do more than just take payment. Our Android payment software turns any point of sale into a multifunctional hub that enables other business applications to invoke a payment application seamlessly to initiate a card or digital transaction that can accept various payment tokens without sacrificing security, thus lowering the total cost of ownership and improving customer service. Simplifying fintech complexity, because you matter.
I'm here to tell you about the final gift of love.
Final.
One day we will all be gone.
Hey, Lara. Nara o bona hore lenyalo mo. Re a keteka.
But we won't be here forever. You need a funeral plan.
Re na le yona le Sanlam. We covered. Empa ha yaanong ba re thusa ka di-life plans tsa rona, like saving for our grandchildren. Now come. Oh, makoti ngowethu.
Could the owner of a BMW KK94BS, BMW KK94BS, please move your vehicle?
from 360 has just come over and said.
One, two, one, two. Ladies and gentlemen, if I could please ask you very kindly to return to your seats. We're about to tackle our final session for the day. So our final session is about to begin. So if you can bring yourselves and your significant others, your colleagues and friends to the seating area as we will begin in 2 minutes. We're going to be kicking off with payments shortly. So if you'd like to understand the future of payments, we're going to have a panel discussion taking place in a moment. And we invite you guys to join. All right. Ladies and gents, just a quick reminder, if you can start making your way downstairs. We'll ask particularly for anybody on the mezzanine upstairs, if you could very quickly wrap up your conversations. So anyone upstairs, if you can kindly wrap up your conversations, we'd like to start our next panel. This is the final section of the day, this next section. We've got 2 panels and a keynote. So we're going to try and move through that as quick as possible. But as we say, it'd be great if everybody could head on down as soon as they can. If anybody's left upstairs in the next minute or two, I'm going to have to come chase people down. All right, folks. All right, ladies and gentlemen, I hope everybody got an opportunity to grab a water, a coffee, some refreshments and eat. I'm going to call our panelists to the stage very quickly, just so you guys know what's happening. Our next panelist group is going to be discussing payments and innovation. Payments and innovation. Now, something that's been spoken about previously, I'm going to test out this mic. 1, 2, 1, 2. Ah, you see, that one's got... this microphone carries some authority, I think. I'm going to use this one. Okay, folks, we are about to start with our panel discussion downstairs. If you are happy upstairs, I kindly ask that you just refrain from talking. Our panelists have come through to share some much anticipated knowledge. I think there's a lot of people who are sitting down here at the front who would like to take that knowledge in. So we just ask everyone to be respectful while our panelists do discuss and share their knowledge. If you have a crucial or critical conversation that needs to be had, you're more than welcome to just step outside. That's not to be funny. We understand that the world and business keeps happening, but just out of respect for everybody who has come here to learn and observe, just to give them the opportunity to listen fairly. All right, so on that note, ladies and gentlemen, I think the people on the floor, I'm going to start with you guys. If you can give us a little bit of a warm-up just to welcome everybody back into the next session. So we'll start here. Thank you very much. Thank you very much. I know you've got food on your plate, but we're going to... No, not this. Just a tiny little clap. Okay, we're going to have to start again. Sorry, guys, because I weren't listening. Okay, 1, 2, 3, a clap here. A clap here, a clap here. Brilliant, folks. So as we say, our next panel coming up is going to be talking about payments, accessibility, and digital adoption. Our moderator is Darren Franks, the CEO of FinNASA. We have our panelist, Jonathan DeMattis from Payat. We've got Eddie Murray from Quick Payments, and Willem Labusrachny from Stratco. Let's give them a round of applause. I think we're good. Right. So I'm handing over to our panelists. Ladies and gents, one more time. Just a quick request once again. I don't want to be a bossy boots of any kind. I'd like to keep the environment fun, light. But as we say, it's simply a matter of respect. Respect for those who have come to listen, respect for those who have come to learn, and of course, come to share. So we just ask to please keep the volume down. And on that note, I'm going to ask you for one more round of applause. Our panelists, ladies and gentlemen.
Thank you very much. Thank you for the warm introduction. So hi everyone, I'm Darren. I'm one of the co-founders of the Fintech Association of South Africa. I need to be honest about something. When Marius spoke to me about a year and a half ago and said he's putting on this event, obviously in the second year, I had a very different picture in my mind. I thought we were going to come and see smart coffins. I thought we were going to see bots sitting here downloading our brains and uploading them into AI. And I thought we'd also see kind of die now, pay later. But alas, we're not. And we're here to talk about one of my favorite topics, which is payments. So I've been thrown into debit check. I've been thrown into reconciliation, aggregation. But these guys are the subject matter experts, so I'm going to ask them to introduce themselves, ask them to tell you a little bit about who they represent and what they do as a business, just to give some context before we sort of delve into the world of payments and what that means for us as a sector. So, Eddie, we'll start with you.
Brilliant, thank you so much. So, CEO of Quick Payments, I have to say, payments is my passion. I love it. We deal with everything relating to it, focus on omni-channel payment methods, focus on reconciliation, and debit check and debit orders is a core feature of us. Thank you.
Thank you. Jonathan.
Hi, I'm Jonathan. I'm Head of Growth at Payat. And really what Payat is, it's a bill aggregation company that does, it's a PSP. We're also an FSP. So we facilitate alternative payment methods through one of the biggest retail networks and digital networks as well. And what sort of Pay at really does is it provides inclusivity. It allows the underbanked and banked to trade in this digital ecosystem. And we take your pay points to the people, allowing them to pay. Thanks.
Thank you.
Hi, my name is Vernon Abaskachny. I'm one of the founding members of Stratcol, which was formed in 2003. I'm the marketing director. We're in this industry for 23, close to 24 years. So I think we do have a very good idea what this industry is all about. And we integrate with most of the management system. We integrate with Paul 360 from A to Z. And we're very happy to be here. Thanks.
Thank you very much. Willem, if I can start with you. The topic of this is payments accessibility, digital adoption, but under payments and innovation. We talk about DebiCheck, which is clearly a very core method of payment. But when we talk about innovation and DebiCheck, do those things go hand in hand? We'll talk about sort of building on existing rails at the moment. But what's been innovation on what's happening in the DebiCheck world? What do people need to be aware of?
I think in the industry, it's quite important to do a debit order run is fairly easy. To get a paid debit order is what it's all about. But goes hand in hand with a paid debit order is an unpaid debit order. And that's where the challenge lies. So, and especially in the insurance, the funeral industry market, your client is not that digital orientated and has got various methods of receiving his salary. Most of them informal, some of the SASA grants, and that's the deduction dates varies. So it's quite important to have a method or a platform available where you can, and that's the challenge, where you can convert a paid transaction, unpaid transaction to unpaid within 24 hours after it's been unpaid. Unpaid recovery solution, not a service, a solution that you give to the client to decide on how is he going to make this payment that he missed yesterday. Of course, he was supposed to get his salary yesterday, his boss paid him late, but he has got money in his account, or it will be on Friday. So you have to know your client, and that's where the challenge lies, to manage the unpaid. To manage payments, it's easy. To manage the unpaid transactions, that's really the challenge of this industry.
I'm just going to talk generally, guys, and feel free to chip in here. Do you feel that the payments systems that are in place in terms of method, like you quite rightly said, there are some people that miss a salary payment, or they're getting paid weekly, or they're getting paid fortnightly, or they're getting paid monthly, or they're getting drips and drabs into their various different accounts. Is the infrastructure set up to accommodate that? Or insurance policy for many, many years, it's come to a point where they have no control over what happens because they've passed on. How do you give them some sense of assurance that actually the funds are going to be paid out to the people that need those funds? Is the onus purely on the consumer?
So it's security protocols that are put in place. For instance, an insurance company would, they'd get the certificate and they'd then approve the policy payout. And what they would do is they would then create a unique identifying code that only goes to that person on their primary contact information. They then go to they either enter that unique reference number digitally, or they go to a retailer, they pin in the reference number, and then a OTP is sent to that primary contact number again. And then they need to enter the primary contact or the OTP at the point of sale, and it comes up and it says, "This is Jonathan de Matthäus, you can pay out 4,000 Rand. And that's sort of the security protocols. And then digitally, you obviously biometrically scan and etc. to identify yourself.
I think what's quite important to know is that the Reserve Bank is very adamant that we as service providers need to, money laundering point of view, because this market is an ideal tool to steal money and move money around. So we have to prove that we have vetted the ultimate creditor as well. So account verification, real-time account verification, and identification, all the other stuff that we need to do.
My next question is again, I think focused on the players in this room, the operators, the insurance operators here. what is it they need to be aware of in terms of payments, the future of payments? I mean, we've gone through, streaming $0.1 of a dollar. Okay, that's great, right? That's in the future. What is in the immediate future? Let's, again, crystal ball time. I appreciate the world moves so quickly these days. I don't think we'll talk about agentic payments. I know we have a different view on those, but let's talk about the next year. What do people need to be aware of? There's lots of change. Willem, you mentioned in terms of the Reserve Bank, there's lots of changes happening with the Payments Ecosystem Modernization Program. Does that actually have an effect on industry, or is that sort of something that is really down to the PSPs and TPPs to look after? Eddie?
I think with AI, becoming more prominent here in South Africa, like that should be a focus. And you need good data for AI to work effectively. So the one thing is fix the data that you're capturing, make sure it's clean, and then you can utilize AI for reporting. After you've utilized it for reporting, you can utilize it for actions. And then obviously we spoke about omnichannel, focus on that. Certain payment rails would work great for certain segmentations that AI can also identify for customers. And then there's things like reconciliation. AI can help with that as well. Automation is a big factor. Rule out any manual work, automate as much as possible. The thing with reconciliation is if you use one provider that's got all the payment methods tied in, it just makes reconciliation such a breeze.
I think Eddie is spot on. I think with AI, we must realize that's the new buzzword around here, AI. AI is not going to solve the affordability challenges you've got. There's still a factor there's still a role that you need to play. You have to have empathy and you have to be flexible, especially when it comes to the unpaid recovery service. If you look at AI can do a lot of things. It can especially from a risk point of view, dictate what type of risk you're taking based on certain information. It can give you a certain strike date optimization. And there's another issue with that, because remember your client signs a debit order linked to a specific date and an amount, especially on debit check. With AI, once you have signed an agreement with your client and you realize his salary date is not the 1st of the month, but the 25th, to move that debit order to the 5th without his consent makes it disputable. Keep that in mind. So get the AI information before you sign a debit order. So if you approach your client, you have a fairly good indication on what his salary date is. And our recommendation to our client is always, when he signs an agreement with you, attach a copy of his payslip and deduct his money on the same date. It's as simple as that. Because the payment streams, all of us, is very flexible. You can deduct every single day of the month. So use that flexibility, especially from an unpaid point of view. Very flexible. Make use of those flexibilities. So that's AI. And your question really was also asked, what is in the future in this industry? I don't know if you know, there's a big rumor by the Reserve Bank that debit orders is going to cease to exist. Do you know that? It's not going to happen tomorrow. Reserve Bank is talking about this for many years. They want to run everything on the debit check rails, which is debit check and RM rails. And I think if I should ask you, any of you, if you know if you know you can introduce or incorporate or launch an RM transaction without going the debit check route. Do you know that? We are under the impression that RM is only a failover for the non-response of debit check. You can launch an RM without going the debit check route. You can track that client's account from 6 o'clock in the afternoon to 12 o'clock at night the first day, and from the following day from 12 o'clock in the afternoon to 12 o'clock at night. It gives you a much better striking rate possibility if you only lodge a debit order, because debit orders only strike that account once, around about 8 o'clock at night. So you've got a better opportunity, and RM is much cheaper than debit check. It's almost the same as an ordinary debit order. So consider that, because the Reserve Bank is moving that direction. That's going to give you only two options, debit check or RM. RM is not debit check rail. You're only going to have debit check. That's why we recommend to all our clients, when you take your client's detail down on a debit order, make sure there's a cell phone and an ID number on that form, and capture that information. Because I think and I believe that same is going to happen when NAIDA was merged to debit check. That merger took place with a cell phone number and a ID number. That's what the Reserve Bank wanted. So I think the similar is going to happen. So just keep that in mind. So start to get used to this new devil called debit check. It's viable. It's much better success ratio. So that's my point. I think that's something that we should consider starting to get used to.
Darren, sorry. Also what I feel is going to happen and that will affect sort of in your world is that policies and client interactions are going to become digital as well. Just an example, I took out life cover with one of the leading brands, and I have still got to meet someone from that company or speak to someone. Everything was done on WhatsApp. And I authorized it, I authorized the debit order, everything was done. I didn't speak to a single person. And that's sort of where it's going. But at the end of the day, people want to speak to people, they want the empathy, but to speed up that process and to really drive cost saving, I think that's really where a lot of business is going to go in the not too distant future.
Thank you. I'm going to open the floor up to any questions. Does anyone have any questions to our panelists based on what's been discussed? There's a gentleman there at the front. Sorry, in the green shirt.
Should I stand? Okay. Hi there. Hi, everyone. So my name's Kevin. I work for a company called Thrive BPO. And we do primarily call centers, training agents to be great at what they do and writing scripts. And one of the big problems that we found with, so debit checks and debit orders behaviorally are amazing. It's what we call defaulting behavior. You're just more likely to pay when it's your default, right? And you don't have to walk to the shops and pay cash. But one of the big barriers, and this is for the first time, people have been paying cash and now converting to a debit check or a debit order, which is good all around, positive net, is what I like to call scam paranoia. So everyone's afraid of links. SMSs, emails, WhatsApps, it doesn't matter. We're all dead scared of links. People are going to steal our money. And this impacts digital adoption. So how do each of you, this is not for a particular person, but how do each of you handle what I like to call scam paranoia? So for instance, we can train agents to handle objections, and that we do very well. But it's the SMSs with the link, and now they see pay at, or, you know. So how do you handle that scam paranoia in today's age with digital adoption?
That is a fantastic question. Eddie.
So yes, links are a big problem. You know, we all had the Buffalo Logistic links and the Postnet links coming to us, and it's all scammed. You know, I showed a link to my wife. She got a speeding fine. And I'm like, this is a scam. Like, I'm going to put in a rubbish registration number in, and everything went through, and it asked for car details. So it's a scam to capture car details. So, like, we've all seen those things. The number one thing is try not to use SMS. Use an official WhatsApp channel, official communication channel, as a customer, and regularly communicate and provide certain information in that link that nobody else or a scam artist won't have. That's the one thing. The second thing is, don't use like the payment gateways link or general links. Use your website, embed payment links or a payment portal in your website. So they go to the website and they make payment on that portal, and they know it's secure and safe. So there's a lot of things that you can do just by following these set of rules.
And it's also about communication, especially in the call center, is to educate your client, say, listen, you will be getting an SMS, it'll be from us. And because people trust brands. So when you get an SMS and it says it's Buffalo Logistics or whatever, then you kind of, or Fastway Couriers, and they want your card details, you're skeptical. But if it's a well-known company and a well-known brand, and you tell the client that you will be getting an SMS, this is what it's going to say, it's going to take you to a link, and then you have all the trusted brands on there. You have all the banks, you have Stratcol, etc., options that they can pay, and they then go and they trust that brand, and they're going to where they're comfortable.
I think it's what's quite important. We see what happened to debit check when it was launched years ago. It was a nightmare. And if you see how easy it is to authenticate a debit check transaction, in your particular case, If you can explain to your client, sir, this is the ways you can authenticate a transaction. You're going to receive a USSD from your bank. If you are a bit scared to use it, go to your banking app. If you click on your banking app, open your banking app by pressing the following buttons, it will lie in your banking app and authenticate it there. Or go to an ATM. This is what you need to do at an ATM, and you can authenticate it there. It's legit. Or go into your branch and ask them to authenticate the transaction. So the point is, I think you are perfectly right. Just to tell a client this is 3D secure, he doesn't know what that means. The big problem is that we ourselves don't know, and I think this is something that we really have to stand together. We do our damnedest to educate our users. It's your job to educate your client how to use these platforms, and make sure that your service provider give you the tools in order to train your clients on how to make use of it. Because we all need to stand together to change the market. So let's be honest, cash is moving away. 10 years from now, 20 years from now, there won't be any cash available anywhere. We go and look at the rest of Africa. You don't buy things cash in Africa. You buy it with your cell phone number. So we have to stand together and educate the market and make sure your service provider give you that tools in order to train your client on exactly how to use these platforms.
I'm just going to make an assumption here, if I can, that when your call center agents are making the outbound calls, they're for collections, right? It's to collect a payment. Okay. So if, for example, I'm hypothesizing here, but if you were to say to your customer who you're calling, that what's your preferred method to receive a authentication or a link? Would it be email? Would it be SMS? Would it be WhatsApp? Given things that can be done instantly, I'm sure with everyone's platforms here, they can be done instantly. If that person is still on the phone and you're saying, well, I'm going to send you want WhatsApp? I'm going to send you a message right now through WhatsApp, and it's instant. I think there's going to be more trust for that consumer to be able to go, okay, well, this is legit because I'm on the phone to someone and they've literally just sent it to me. I think when things are sent hours, days later, you always look at things and go, ooh, is that legitimate or not? I mean, I don't know how many car speeding fines I've got. I guess I'll find out at some point. But I think that's about it. It's about empowering the customer to give them the choice of what method perhaps they are comfortable with, but doing that instantly. We can make instant payments. There's no reason why you can't send instant notifications. I hope that gives you an answer. Cool. Any other questions? Wow. Okay. Oh, there is. Sorry, there's one at the back.
Hi there.
Hi.
So in terms of the accessibility and adoption for all the innovation that's taking place at payments, I think statistically, South Africa has about 80% insurance penetration. And if you take away the funeral industry, it goes to like 30%. And when you look at who the primary clients are for funeral insurance, there's a whole bunch of people in there that nobody understands. There are SASO recipients, there are guys selling food on the side of the road, et cetera, et cetera. What does that mean in your world for accessibility and actual real-world adoption? Because ultimately, businesses need to collect money, and the world is very keen on turning its back on cash. And there are entire neighborhoods where if people will go to the funeral service business to give them money. And in terms of accessibility and adoption, and also efficiency on the part of the customer, what is the current reality for this whole thing, payment and innovation in your world?
That's a good question. Who would like to take that?
So the way that we do it is we take payment points to the people. So instead of the person having to go in with that cash, and it's actually quite a funny story. There's near Baragwanath Hospital, there's like a little street vendors, and they cook meals. And it's just because I saw a statistic the other day that South Africa's got a 32.7, I think, unemployment rate. And what that statistic doesn't take into account is the people that aren't regulated, that where there is cash moving, but it's purely cash. And what this gentleman does, proper entrepreneur, I wish I could invest in him, is he went and he built like a wheelbarrow sort of thing, and he makes a fire because these vendors, they cook, and they cook constantly, but they've got no way of keeping their charcoal warm. So what he does is he got a spade, he got a wheelbarrow, and he sells a spade full of warm charcoal for 20 Rand. The guy earns 12,000 Rand a month. And he is someone that we need to give, he wants a funeral policy. And we need to allow him that. And the way we do it is we uniquely identify him through a policy number and a prefix, and then we allow him to go and pay at his local spaza shop or at a pep store or wherever he's going already, because he's not making a special trip to your premises. He's not spending money to go and pay for that policy. He's already going to a tier 1 retailer. And that's how we try and service him, and a lot of the industry try and service.
And I think what's quite important is there's one word that you must understand, sir: patience. 50 years ago, when you asked your particular target audience, your market, to sign a debit order, they didn't know what you were talking about. You wanted to pay cash. Now most of your premiums gets collected via debit order. It takes time. We have to, and that's like I said, we have to stand together and educate the market what a digital payment is. Educate him what he can pay on his app and what he can do. It's our responsibility. It's in order for this market to change, we have to stand together and change and train the market on what's happening, what's going to happen, and realize it's not going to happen overnight. That person that pays cash currently, he most probably will, after a few times after you've explained to him how to make a digital payment, he will consider it, and once he's made it, he's sold. He will keep on doing it. So patience, and let's educate them, and that's vital.
I think that was a great piece to close on. Ladies and gentlemen, please, round of applause for our panelists. If you have any follow-up questions, they're definitely going to be around for the next few hours. And thank you very much for listening to us. Thank you, gentlemen.
All right, folks. Our next panel, we're going to be keeping Mr. Darren Franks on the stage with us for a little while. He's going to be moderating the next discussion. Sorry. But just a quick one. I really enjoyed the question about the paranoia, the scam paranoia, because I had a situation, the bank phoned, they said you've got a bit too much money, good problems to have, too much money sitting in your current account, let's move it before something bad happens. And I was on board until the lady said, okay, we're going to move it now. There's going to be approval on your app. You just got to approve it. I said, my phone's broken. I can't hit the button. I'll just come and do it in the store. So it's a very real, from a consumer perspective, after the whole conversation, I was still like, you know what, I appreciate you, but I'm going to go do it in the bank. Right now, we're going to be talking a little bit about practical compliance, KYC, and risk for low LSM. As we say, Darren's going to join us again as our moderator, and then we're also going to welcome to the stage the rest of our panel, Harry Pretorius from Cyclopedia Consulting, Henny Vermaak from Intel, and Reino Volschenk from Masthead. Let's give them a round of applause. Welcome, gents. Welcome. Cheers, brother.
Sorry, forgot. From payments to compliance, I'm sure this is a topic that everyone has been really looking forward to. This is probably the showstopper of compliance in the world of regulations in our sector. Actually, it's not that boring, and I say that with the greatest of respect. This is a part of the sector, and all sectors, certainly in the FSP world, that is fundamental. And I'm going to start with a question to the panel here, is really looking at the consumer. So are we, and do we have compliance frameworks in place to protect businesses and to tick an audit box and to satisfy a regulator? Or are we having compliance conversations now that actually have the consumer in mind and protecting them and their rights? And I'm sorry to throw you straight into it, but there we go.
Okay, so let's start with something else first.
That's not fair.
Yeah,
You can't
I'm
divert.
sorry, but look, I mean, I'm from a technology background, okay? My children says that I've been in technology since Noah built the Ark. So that's where I come from. I built technology to assist and simplify compliance efficiently, but if you ask me to read compliance stuff, I do have insomnia, but if I want to go and sleep at night, I read compliance documentation, okay? So that's the reality of it, okay? However, coming back to Darren's question, yes, we do, in both areas, protecting both and the entire...
lot today in a COFI, Connected Financial Institutions Bill framework going forward, which is really the first time that we've seen TCF principles, treating customers fairly principles, being enacted into law. So there has been mechanisms that the FSC has been looking at. Similarly to years ago, 2018, there's been a microinsurance regulatory framework which been introduced for that exact purpose, to make the entry levels a bit easier and protect the customers, risk-based or proportioned. However, the uptake wasn't that big. So yeah, I would say yes and a bit of no.
Okay, thank you. Harry, would you like to chip in there?
Last but not least, maybe just by way of introduction, my name is Harry Pretorius. I'm a director of Cyclopedic Consulting. We specialize in conduct risk, governance, risk and compliance from multiple, completely industry agnostic perspective. I'm an attorney, notary public. I'm a CProf, a compliance professional, one of the 20, about 20 in the country, one of the youngest in the country, I would like to believe. I'm hiding my grey. And then I'm also a certified ethics officer. I've had the privilege of operating and working in a broader financial services space for 25 plus years. So that's where I'm coming from. Reino, yes, I agree with you. It's yes and no, and obviously it's a moving target. There's no, when you arrive at fair, then you know you've arrived. And both from a regulator perspective as well as from a customer perspective. Although I would actually like to quote the Honourable John Dutton, where he said, fair is not fair. Fair is where the one party has managed to achieve everything without the other party being able to complain. So fair is all relative in any event. But I do believe that slowly but surely, both from a customer perspective as well as from an industry perspective, we are moving towards being more inclusive and being more fair towards both parties. Thanks.
I'd love to delve a bit deeper into this fairness principle in terms of the customer, all right, or the consumer. What does that mean to the consumer who perhaps doesn't have the level of understanding or literacy on terms and conditions, for example? I'm sure everyone here downloads apps. When was the last time that you ran an update or downloaded an app and read the terms and conditions? Anyone? Okay, anyone else? But that's the reality, is if you want something, you have that demand, you're just going to click through and you're just going to sort of agree because, oh, well, it's Android or Google or Apple, whoever it may be. Does the same principles apply to insurance? So it's a recognized brand and it must be okay because there's millions of other people that are using this policy. Is that fair to ask people to sign up to terms and conditions that perhaps they don't know and don't understand? Any?
I just want to get back to the terms and conditions and reading it. My statement on that is reading the terms and conditions is like arguing with your wife. You listen to everything or appear to listen to everything, but at the end you just click I agree, okay? You've got a very valid point. The problem is that most insurance legislation and terms and conditions are too complicated for the average consumer to understand. Although very necessary to protect the consumer, for them to be in a position to understand the terms and conditions is a very complex task. The only way that I could see that happening is by educating the market in that aspect, but even that will be very difficult to do. in my view, if there is a dispute on a policy in terms of terms and conditions and fairness or treating the customer fairly, maybe the insurance ombud is in a better position to defend the customer and assist them.
I'll let you take that question. I've got a follow-up to that as well, but please.
Thanks for bringing that up, exactly that point. The ombud, we've seen in a couple of cases as of late where they've actually taken the consumer side in an instance where you go and sit in front of a end client and you have them sign a thick pile of documents. So what the ombud stance in certain instances were that you can't reasonably expect that client with his level of literacy to understand and go through an entire pack of documents within a 30-minute consultation. So we have seen the ombud take quite a strong stance. Yeah.
Harry, if I can ask you the same question as well, given your academics and given your professional qualifications, how would you help insurance companies here answer this question? So they have to be responsible to be treating customers fair, but they also need to comply to regulation in terms of listing what those terms and conditions are. Where is that balance?
Darren, exactly that. It is a balance, and I think as Henny and Reino alluded to, I think there's an obligation on the industry to also educate and make aware of the terms and conditions and all of that, but we're living in the instant gratification type of era at the moment. So there are various tools available to assist both the insurer as well as the customer to make those legalese easier. I mean, it's the TCF is one of the requirements is to write plain English or provide the policy wording in the home language of the customer. Not only that is, we heard earlier this morning the Paul 360, the 1-minute policy, but it's much, much easier to sell. There's various applications and technology out there, the Insure 1110, which is a locally developed app where you can upload your policy and ask, am I covered for ABC? And it provides you an instant answer. So I think, yet again, it's a journey, and I don't think we're going to get to all the answers overnight, but I do believe that there's some light at the end of the tunnel, and hopefully it's not an oncoming train.
Two things, if I may. You mentioned the Ombudsman. I don't have any idea or any insight into what that process is. But I am dealing with a matter at the moment with another professional body. Their queuing system is currently 3 years. 3 years from making a complaint to actually being addressed or adjudicated. Now, in the case of funeral insurance and funeral cover, you can't wait 3 years, right? If there's an issue there, or if there's a challenge, or if there's a question. So how do we protect? And I'm sorry to keep harping on about the consumer, because I appreciate there's a lot of insurers here, but that's ultimately who our customers are. We'll come into the sort of the job side and the economy maybe a bit later, but I want to know how we protect the consumers, because they're the people who ultimately need these policies and need to be paid out. Who would like to take this? I'm putting you guys on the spot a little bit, but who would like to take this?
I keep on going off the point, okay? Sorry, Darren, but that's just
Not at
me,
all.
okay? Coming back to interrupt you, I didn't introduce myself. My wife says I'm always late, and here again, I'm late introducing myself. Henny Vermaak, Managing Director from Finintel, and contrary to your thought, we specialize in automating FIC compliance, not the rest of the compliance on the discussion, although obviously I do have some experience there. In terms of protecting customers, I have real insight there too, okay? So, and this is the reality. Last year, August, my son passed away, and which I thought I had with actually one of the big insurers, a funeral cover and life cover policy with him, which I initially took out. The cover for my son was taken off when he was 21 years old, okay? And he literally became 21 years old 6 months prior to his death. Is that treating the customer fairly? In my view, no, it's not. How am I protected? No, I'm not. The reality is that I do believe that protecting the customer the end customer, the policy holder at the end of the day, is more important than we can ever imagine, because it's their rights being violated. And I do understand every business is in it to make money, and insurers have the right to make money, but the customer still needs to be protected on the end of the day. Do I have the answer for you, Darren? No, because I didn't get a paid out claim. Okay, but maybe Reino's got some answers for you.
I'm very sorry for your loss. I didn't know, so I'm very sorry for your loss. Harry?
It's passing the poison chalice. To follow on that stuff. As I said, there's no be-all and end-all, and I think a winning recipe for both the customers as well as the industry is to have a robust regulatory framework where the funeral service providers are trusted. And I'm talking throughout the whole value chain, from the customer to the intermediaries to the insurers are trusted. How do you build trust with time? You're not going to sign up for a funeral policy with someone that only started yesterday. So it takes time. How do you build further trust from the insurer perspective is adhere to comply with your own requirements in terms of the policy. If you've received all the relevant policy requirements in terms of a death notification, pay the claim. Don't sit on the claim for another 5 or 6 years. Pay the claim as soon as possible. I mean, for the purposes of funeral insurance is to cover the cost of a funeral. And obviously, the sooner you pay out that, the higher your trust will be. Then the flip side of that as well is, obviously, we do have nefarious entities out there as well and abusing the process, where you get the duplication of a death certificate times 6, where the same person has been claimed, has passed on, and is being claimed at with 6 different insurers, stuff like that. So, yet again, the balance of fairness needs to be assessed throughout the whole process.
Just changing gears slightly. We spoke, there's a question at the back in the last panel with regards to financial inclusion, to the population who's at the lower LSM. A lot of these individuals would benefit from insurance policies. We heard from the panelists before that cash is an option and you can pay for these. However, there are 2 elements here. One is you need to onboard that individual. Secondly is you need to verify the beneficiary of those policies. Now, for people that aren't financially included, i.e. don't have bank accounts, how is that possible within the confines of regulation that we have now? And what is industry doing to get to that next point? I'm happy for anyone to answer that question.
Okay, so I'll answer the question in part. Through technology and automation, Bull 360 is great policy administration system, and the technology available to us, it is not difficult to identify the individual. There are automated biometric solutions, which is mobile that you can use on an app or a tablet during the onboarding process, and do all the compliance processes automatically, where the entire compliance process is embedded in your policy life cycle. And that's kind of building onto the trust again of the relevant company wherever they are taking part in in the insurance life cycle. And that's a key important factor, because now you've identified the individual. You know that he's alive. You can verify liveliness. You can check against trusted third-party sources. And a lot of people in the industry think that compliance should be or are expensive or is difficult. If you embed your compliance processes in your policy administration process and your policy administration system, it is actually a lot more efficient. Your customer experience is more efficient. It will save you money on staff and possible risks in terms of mistakes that's being made. And yes, there is some risk, again, which we can touch on a bit later in terms of collecting the premiums in terms of cash. And there is resistance, like we heard on the previous panel, for the premium payers to actually pay these policies on an electronic or a digital platform through banking cards or debit orders or debit check, which is a problem. And I really do hope that we can drive that to be more inclusive in the industry, because that will solve a lot of other regulatory problems in the entire insurance industry for that matter. Okay.
Yeah, thank you. So I think the crux of it, and just to go back to who our clients are, it's not the end client. Our clients are the brokers, the funeral parlors, the administrators, etc. So we look at it from that lens, and we try to advise the brokers, let's call it brokers for a collective, how to best simplify your systems to make provision for compliance on the one side, but a reduced level of compliance based on the risk that that particular client holds for you. So obviously, FICA has a couple of standard documents that you have to comply with, having an RMCP. When you onboard a client, you have to do ID checks, proof of residence, proof of banking, all of those various different nice things, which is sometimes a problem specifically in this space, because every single step that you put additional is a dropout point, right? So that's where we lose clients. There are various different mechanisms as to how one can get around it. However, they're very or severely underutilized, essentially, being the usage of third-party verifiers, like Henny was saying, usage of potentially as a middle ground, churches or trusted institutions that has already onboarded these clients or know who the clients are as verifiers. And then there's some challenges that the industry face. I mean, I know that the Department of Home Affairs are looking at a single unique identifier, digital identifier. However, the problem with that is that has a prerequisite of you have to have a smartphone, you have to have data. So that doesn't necessarily cater for the larger LSM market. So basically what we try to employ within our practices that we service is a risk-based, reduced compliance. So let me just choose my words correctly. You have to comply, however, on a risk-based proportionality.
And that was exactly the word I was going to use, proportionality. But I have a question. Maybe Harry, you could answer this one. In terms of proportionality, who infers or who decides what's proportionate to what organization, to what LSM, without being discriminatory or without causing even more headaches to compliance departments within insurers or FSPs?
Sadly enough, Darren, that's something that the industry as a whole would appreciate some additional guidance and from a regulatory perspective. But obviously, I mean, just plain common sense, and I know common sense is not that common, is you can't apply the same level of controls for a higher LSM investment-based type of product where the premium is $1 million or $2 million versus a funeral policy. So it doesn't make sense. So most of the guidance from the FSCA as well as the FIC provides for risk-based approach, and the risk-based is ultimately up to the providers to decide whether or not they are willing to accept the risk or not. But I absolutely agree with Reino on the proportionality. You don't need to drive a Mercedes if a bicycle will suffice.
And that's a very good point. Would the regulators agree with you?
Okay, so Darren, I think there are key aspects in terms of looking at FIC specifically, and what the FIC says is using a risk-based approach, taking into consideration a risk assessment on your product, business, and client risk, and combine that and say, okay, well, in this industry specifically, your product risk is very low, your risk in terms of specific factors are very low, and then document that in your RMCP like Reino discussed. But what we do as well is we automate that risk assessment for you throughout the policy lifecycle. So when you onboard a client or you pay out a claim, that risk assessment is automatically done. But the drafting and deciding of that risk and whether your product and or business is at a higher risk depending on where you fall into the industry, again, taking an investment product into consideration, that I believe should be drafted by a proper compliance officer. Okay, we are building tools to ease access into getting RMCPs automated based on the products that you as an accountable institution sell, and then obviously advise on where your product risk and your business risks and your client risks are, to enable the smaller guys to be compliant, because that's the ideal, okay? Because compliance, again, builds trust. Now, if you look at that and look at where the decision lies, it should either be automated by answering accurate questions and or be done by somebody that knows the industry well enough to advise you and draft that risk-based approach for you.
Right. You okay?
Sorry, folks. Sorry, everybody, if I can grab your attention, please, especially the guys up on the mezzanine. A little bit awkward to interrupt a panel discussion, but it is necessary. If we can just ask, guys, that everybody keeps the volume down. We understand you want to have conversations. As I said, we invite anybody, if you'd like to have a serious conversation, you can have it outside. That wasn't like an invitation to fight. Sorry, that sounded like catch me outside. It wasn't one of those. It's just, please, I've had a couple of people come say to me that they cannot hear. Unfortunately, the sound from the top does flow down onto us down here. We're wrapping up our final sessions for the day. We're nearly there. I am going to come around with a notepad, and if I catch you talking, I'll write your name down, and you won't get lunch just now. I'm just saying. Yeah. Thank you, guys.
Thank you very much. Let's just move on to fraud. It's a big area. We know, I was talking to someone yesterday, and again, I'm not quoting this, so please don't write this down, but apparently there's syndicates in South Africa that are operating up to 7 million AI agents, which are going out there, which are building profiles on every one of us, that are taking their time, they are building up their data, and at some point, they'll click the trigger, right? Or they'll pull the plug, or whatever acronym you want to use. And that leaves everyone very, very open. It could crash an economy overnight, quite frankly. What do we need to do as industry? And I appreciate we're representing quite a broad industry here, not just insurance. What can we do to safeguard that? So safeguard our businesses, but also to safeguard our consumers and our customers, and our service providers and everyone in that ecosystem, because this is not just AI fraud. I mean, that's just one topic we were talking about. But there's syndicates operating, some are digital, some are physical. There's, again, I'm sort of doing my research yesterday on some of these scams or ways of claiming funeral cover and funeral policies, and it was quite scary stuff when you read into it. What can we do as an industry to try and get ahead of this, rather than it being whack-a-mole, right? Which I think fraud, IT security, that really is, you have to be reactive, and at the moment it's bot versus bot. So how do we get ahead?
Okay, so that's a very valid question, Darren. For interest's sake, I've actually been part of a couple of these investigations where AI bots targeted specific online product suppliers in various industries. Just to note as well, obviously we're industry agnostic, being a fixed solution supplier, but in various industries we've seen this being rampant. The key is actually being compliant again, because by being compliant, especially in the insurance industry, is that, if you look at the policy protection rules, if you look at FIC and identifying your client properly, if you go through the proper processes, which can be digitized and automated, because we supply a product as well where you can biometrically verify the identity or the person digitally by matching that to the smart card ID and verifying that information against a third-party trusted source. So now you've got a combination of 3 sources of information to ensure that the individual that's doing business at the end of the digital platform is actually who they say they are. Okay, and by doing so, you reduce your risk in that specific portion of risk and fraud drastically. But not just during onboarding, you can do that at claim stage and or policy, if there's any changes in the policy, to ensure that you have the correct information, and again, you're compliant.
Okay, thank you. So I'll answer that from a bit more compliance perspective. So from our side, where we start is making sure that your internal compliance framework is set correctly. So that includes things like your risk management plan and risk management compliance program as well. So we ask by asking the client, where can your data, your documents, your storage, your authority be used or abused within your particular FSP or outside. So there's obviously a couple of risks that's prevalent in the market, being inward and outward type of risks. Outward, we all know, for example, like Harry was referring to, policy stacking or claims fabrication, making sure that you stage a funeral after the policy has taken into inception or something like that. And it does happen. A very big risk that we've seen, and I've been told to censor this a bit, is more the inward risk. So where your FSP can be abused for fraud. We see this in ghost policies, for example. Administrators or at agent level, they write policies, pocket the commission, policy never took into effect, etc., which obviously we can see happen quite a lot in the market, taking into account the type of market that we service, and there's still a lot of money being given. I know the previous panel spoke about debit orders and all of those various different things, but we see money flowing quite a lot. So there's still quite a large gap to fill there.
Harry, if I may ask you about synthetic IDs and synthetic profiles, which has become even more apparent over the last 2 years, perhaps even longer. So great, you can verify that someone says who they say they are, but if that person isn't a real person, but it's got a synthetic identity, how do you verify that that person is a real person? Because you can do liveness tests and what have you, but there are ways of, arguably there are some ways, if you don't have the right technology, in place, there are ways of getting around that system. So is the answer technology? Is the answer innovation, like Henny is talking about?
Darren, I don't believe that there's a right answer or a wrong answer. It's obviously technology is always very powerful. And then actually, as ridiculous as it might sound, is in person. That's still the best level of control, is person to person. Is actually go and don't be shy or scared to drive into a township and to go and meet with a person, and actually it will build an additional layer of trust with your ultimate client. Is person-to-person verification is also another option. So I do believe actually a combination between technological as well as personal.
I know one of our banks in South Africa, they meet every single individual that they onboard. Every single one. They go out and they meet. Now, it costs them a lot of money in terms of customer acquisition, but from a loyalty perspective, from a trust perspective, we were talking about trust. From a trust perspective, that is the ultimate, right? We've all got access to phones, and we've all got access to Zoom and to Teams and what have you. That's very seldomly used, certainly for liveness tests. I actually have had a offshore policy that I was trying to sell and liquidate. The process to try and do that was so difficult. I mean, it got to the point where I had to go into a lawyer's office. They wouldn't just accept a commissioned, but I had to video myself signing each page with the commissioner, then commissioning that document, and then sending a video file, which then had to be encrypted and uploaded. Mission, right? We look at it from a South African context, and we look at the markets that we're serving, especially in this industry. Not everyone has that level of, not everyone has the ability to go, and I'm not saying to that extent, but not everyone has the ability to go and get something notarized or get something certified, or has access, as you quite rightly says, has access to a smartphone, has access to data. We need to find ways we can take, which is fantastic, but we need to find ways to onboard those lower LSM that don't have, are digitally excluded, not for their own desire, but that's just a reality of perhaps where they live in rural parts of South Africa, to be able to get these people through, to be able to ensure that the beneficiaries who they put down on the policy are real people, they're not being coaxed into putting down someone who is running a syndicate or whatever it may be. It comes down to proportionality, though, doesn't it? Because you can't apply the same rules to someone investing 1 million rand to someone having a life policy, insurance policy of 50,000 rand. What would be your sort of closing statements on innovation? What do insurance firms here, what do they need to look at from a compliance angle to use compliance as a tool for innovation and I was talking with the FSCA last week, and we were talking about using compliance to further your business, right? I can't think of the exact words, but it was something along those lines. How do you do that? How do you ensure that actually you're using compliance, you're using the tools, the technology in place to actually deliver a better service, to reduce the risk that you have on your own business, to satisfy obviously your shareholders, and to really drive business forward? I'm going to ask that question to all three of you, and then I'm going to open up to some questions from the audience.
Okay, thank you. Yeah, I'll touch on that first. So I think Henny will touch on it from a FICA perspective. From a phase perspective or overall compliance perspective, in our opinion, we've been having chats with our clients to have systems, onboarding systems, CRM, customer management systems. And you have to, it's quite funny, I was standing in the line this morning and I don't see the gent in the audience now, so excuse me if I pinpoint that, but he was mentioning now when he read my card which says compliance officer, we're the enemy because they develop and develop and develop, and then at the end compliance says no, you can't do this. So making compliance part of the process from the very get-go, and that including compliance in your CRM systems. And to your question, how does that help the business? Going into a Kofi world and an Omni-RR reporting regime, you're going to have to report on data. This forces you to have some form of a system to capture data and to have management information. So to see your claims ratios, to see your complaints, number one, that's quite an important one, but also your lapses, those types of things. So the FSCA really wants to drill down into that data to get to the root cause as to where the problems originate. So I would say technology and using compliance as a tool, a strategic tool to further the business.
I just want to add on to what Rainer said. I believe that the entire compliance process needs to be embedded throughout the entire policy life cycle in your organization. Resistance to compliance opens you up to risk, but by embedding this processes and using systems like Pol 360 to manage this for you improves efficiency in your organization, because compliance doesn't become a burden. Compliance is bedded into your systems, which enables you to be compliant in a lot less manual effort into your organization and reduces your organization's risk. So I think, getting back to that. So from a FIC perspective, I mean, everything that we do from risk rating your customer to client ID verification through to the EDD process, claim stage, everything is automated. So the only time that you will have to do something manual is if there is a risk that's identified. And by doing that, from a FIC perspective, if you look at what the FIC is doing, they're really going to town lately. I mean, they fined somebody 45 million rand last week. I had a joke about this earlier. I think there was one of the senior officials that used to be in government that wrote out this fine, because the fine was 11,494,000 rand and 1. Okay, so the fact is that the FIC is out there enforcing compliance, but not just the FIC. The FSCA has additional requirements on FIC compliance as well. So the point is, my suggestion is use automated systems, use technology to your advantage, reduce your company risk, and embed it into your entire policy life cycle, because that just saves you a lot of manual labor and inefficiencies within your organization, and reducing risks by doing so. Thanks.
Thank you. Harry.
Yeah, I know compliance is being used as a swear word, but actually compliance is just plain common sense. Even before the FICA Act was enacted, how did you do business? You asked for a copy of someone's ID, or you asked for the company registration documents. So it's not compliance, it's common sense. So to strengthen your control framework, it's a no-brainer. It's the better your control framework are, you mitigate your risk, the less your exposure are to these data breaches, to potential regulatory fines, to regulatory visits. So for me, it's a no-brainer, it makes sense. Rather spend your time actually selling and servicing your client or your customer than spending your time trying to decipher the legalese from the regulators. So yeah, I hope that answers your question.
That's some very practical advice, thank you. I'm going to open up to some questions in the audience. We've got two here.
Me again first. Yeah, it's me again. Am I the only ginger here? Probably. Okay, so first of all, thanks everyone, very interesting. Harry, I loved your take and I believe in compliance too. So, Henny, you said that compliance builds trust. And I was just reflecting on Reino's comment about people saying that compliance is the enemy and compliance is a swear word. Well, I think a lot of that comes from the fact that we use such technical language. So just the title, we've got 4 terms there, and 2 of them are acronyms. KYC, LSM, FIC, and we're talking about the lower strata of the population. And there's this thing that in our industry that we call the curse of knowledge, which is that all of us here probably understand these terms, but when we're talking about the LSM community, there's a big problem there. So compliance may build trust, but the way that we deliver that to people breaks trust. And we've got studies that show, like financial advisors, that use more technical language because they want to sound smarter, actually get less clients because people don't understand it. And we really do want to understand what we're getting into. Otherwise, we get into a problem where we feel like, in your example, that there's T's and C's that we've missed, and they're there to screw us over. So my real question is this. To really treat customers fairly, whose responsibility is it to simplify the language, focus on understanding so that we can help these particular strata to understand it? Is it the brokers? So you said that your clients are the brokers. Is it them? Is it the insurers? You know, like the big guys, Sanlam, Old Mutual, whatever? Or is it you all, the compliance experts? Whose responsibility is it?
From my opinion, okay, and again, I'm FIC expert, not compliance expert, but I'm going to answer anyway and also give the rest of the panel an opportunity to do so. The authorized sales representative. That person, that individual that's doing the sale, unless it's an online sale, should be in a position to explain the terms and conditions to you in a clear language in order for you to understand that. And that's their responsibility and accountability, okay?
Yeah, so I agree with Henny. However, I think it's a bit broader than that. I do believe that the product providers do have a very large role to play in writing policy language in a way that the layman can understand it. It's not written for legal scholars, for example. However, where I do believe Henny is correct is on agency at broker level. It's your responsibility to make sure you understand the policy and you can explain it to the client. Make sure that you can understand not only the benefits of it, but more particularly the exclusions. From a compliance perspective, yes, we also play a role in making sure that our clients are trained in using certain type of language. So for example, if I look at a file sample, I would look at the record of advice and see how is this policy explained to the client? How is this portrayed to the general market? So we check it as well. I do believe Henny's answer is correct.
And then last but not least, the regulator. I know there's a big drive currently by the FSCA for the financial awareness and education, and I think it definitely plays a role in the bigger value chain as well.
I'm going to chip in as well. I think it's a combined effort, actually. I think it's all of the parties, but also industry association. I think it's also around national government as well. We've got Money Smart Week, which is happening in August, and that's sponsored by the National Treasury and also the FSCA, and that's about looking at exactly these types of questions and answering those. I would just pose a question. I'm not looking for an answer, but anyone who has onboarded with one of the crypto service providers in South Africa or globally, you would have gone through a process where they actually ask you some very, very basic questions. Do you understand what happens if you buy this? Do you understand what happens if the price drops? Do you understand and they're very simple, but it's proportionate. So if you then want to get into derivatives or you want to get into other forms of investing, it's going to ask you more advanced questions. And unless you've passed those questions, you're not going to get enabled. You're not going to get your account open. Now, perhaps, and I don't know the insurance policies here, but perhaps with some learnings we can take from that process, which is, yes, you need to comply. Yes, you need to understand what you're getting into. But how do we put that into something that's effectively gamified, right? And without losing the consumer or the customer to an elongated and laborious process. And I think that may be something to look at. Yeah.
Okay, so just from that perspective, do you understand that the regulator do look at that, okay? The regulator specifies that if you are selling a policy through an electronic platform, you need an automated advice, governance structure and policy in place where you look at the risk of the product and create a policy in such a way and describe the terms of the policy in such a way electronically for the customer to understand it. Whether that's enforced practically, that I can't vouch for. But the governance for that and the proper regulatory framework for that is already in place.
Thank you. I think there was a question at the front. Yeah.
Hi, guys. Hi, guys. Can you hear me? Yeah. Just from a technology perspective, why has the industry not created an LLM that allows you to upload your policy, you as the insurer, upload your policy and vet it against the current regulations and against rulings that Ombudsman has made in the last 6 or 12 months? That'll ease the way to help you assess that you are supplying it truth and fair policy to the end customer. I mean, it's simple AR actions.
I think this is probably a...
I like the way you think, but I don't have the answer.
Maybe this is a Harry answer. Harry,
it's going to cost you.
I agree with Henny. I think it's a brilliant idea. But this green buds of growth shooting through, as I've mentioned, the Insure 110, go and scratch around there a bit, but not 100% addressing what you're mentioning there. But yes, I think we're not very far away from solutions like that.
Have a comment on that?
Yeah, and I think also AI is sort of in our space in an infant stage. I don't think we've reached maturity as of yet. So I think what we see on a daily basis, we utilize AI, yes, in our practices. However, we still argue with it because it gets it wrong, similar to very public cases that we've seen. So I think it's a very difficult and you have to be very careful to use a model like that. I don't think it's going to do away with any form of human intervention. I mean, we were chatting about just purely using compliance systems for compliance. And the problem with that is you're taking the human out of it, the human judgment, all of those various different things. And I don't think we're there yet, to be quite honest.
There is also, just to mention, a working group that is being run by FINASA with the FSCA, specifically around responsible AI within financial services. These are some of the topics that will be discussed amongst many others. And I think it's difficult if you rely on, and I'm sure many, many people would upload a policy to their chosen AI and ask it some questions. If you've ever played with, I'm sure 90% of people here have played with an LLM. You ask it a question, it gives you an answer, and you go and challenge it. And it goes back, oh, yes, actually, you're right. I didn't think about that, which is great if you've got foresight. But in the instances of the critical policies and insurances we're talking about, you don't have that opportunity. So I think there needs to be some very tight guardrails around this. Otherwise, there's going to be no recourse. You're not going to be able to go back to OpenAI and say, you advised me wrong. You've read the disclaimer. You've probably written some of the disclaimers, Harry.
And I agree. I think that AI can be a great tool, can be a great enhancement to almost any industry on the planet. But in my personal experience as well, we also use a lot of AI. And I believe that there is some hidden force trying to test my patience in AI models answering my questions, because I'm asking simple questions sometimes which is totally inaccurate and is not grounded or justifiable. Again, not to say that LLM models can't be taught, that is correct. I think there is value in it, but I think we're sometime off that. The AI models aren't built for details like that specifically yet.
Sorry, just to come back to the point, it also opens you up to different risks. From a POPI perspective, now you're dealing with information to a third party, so you have to get specific consent from your clients to do exactly that. It opens you up to cyber risk, and then the question is asked, is this your AI garden, or is it open to the whole of the FSP fraternity? So that, and then someone mentioned automated advice. So does this make automated decisions, etc.? Because if it does, that brings you open, or that opens you up to a whole different regulatory framework.
If I'm not mistaken, that would open you up to a phase, right? In terms of advisory, would that open that sort of robo-advisor into giving you advice? Okay, so a completely different framework to what we were talking about. Okay. Is there any further questions? Oh, there's one right at the back. Okay.
One more from me as well. Give me a minute. There's a couple of issues with, first of all, this approach in general, but we'll park that. There's compliance, and I think I don't know what the assumptions are on the part of you guys as professionals, but I'm a value-added service provider, so I've done a bit of door-to-door in the industry. And one thing I realize is that not every non-compliant business is a bad actor, right? Because you talk to guys broadly and you find out that if someone passes away today and the business has got to go through the compliance process with the underwriter and the funeral is scheduled for, I don't know, let's say Saturday, for example purposes, and the guy gets jammed up, the operator gets jammed up with the compliance, and then he's got to pay for his client's funeral out of his own pocket. And then, after he's done all that, he's got to go back and fight with the underwriter. Now, that then sort of, I don't even know what words to use, but there's clearly a disconnect between what compliance wants to accomplish and what people are experiencing in the real world. And in some of these cases, because the funeral parlors and the smaller players will organize themselves. So you'll find that there's like 50 businesses, there's 100 businesses who are all having the same problem. And then you ask yourself, how many lives could 50 businesses cover? Even if we assume 1,000 lives per business, that's a lot of risk for a lot of people who are paying money consistently to make sure that they get what they're paying for. And I guess my question is, how, with risk, I'm going to say risk as a product, if that's even the right way to look at it, because I think that probably would be a way that's needed to take, an approach that's needed to be taken with risk. If I don't know, but you guys will tidy me up, because risk is essential. I think even in pursuit of profits, risk is essential. Risk management, rather, is essential, and compliance, et cetera, et cetera. And where the attitudes, because of the difficulty, put risk management, compliance, et cetera, so far out of people's orbits that they are willing to take so much risk to participate in the industry to a point where it could actually bankrupt them. Can you see how, what did they say, it was 50 trillion in under insurance? Can you see how compliance could also be a reason why there's 50 trillion still to be, I suppose, still to be covered in terms of premiums in the insurance industry? I'm going to park there. I could go on, but I'm going to stop right there. Thank you.
You have a very valid question, and that is a real concern to a lot of participants to the industry. My answer is going to be short, not as long as all the previous ones. The short answer is using the risk-based approach on your industry, okay, to use risk proportionately to your industry, enabling technology through your policy life cycle. This will enable a smoother customer experience and improve the time out or the payout of a claim at claim stage rather than prohibit it. So technology should be the enabler to improve the service to the customer, not the other way around. Okay, and because compliance is embedded in your electronic or your digital policy administration processes, it's automatically part of it.
Yeah, I think just to touch on what Henny said, it's a brilliant question. So I think being from a practical perspective on the ground with the brokers, we have this conversation very, very often because we've mentioned TCF how many times on this panel. Our brokers normally says, who treats the broker fairly? And that's the question that we get faced with. So to answer you directly, I don't have an answer for you, how to get it right. The cost of compliance is quite heavy at the moment. And to touch on the trust aspect of it, compliance is trying to build that trust to make sure that you as an end client understand that there is going to be a payout, that the files are checked, etc. But now, like you say, it's been a tool that's being used to say your claim is delayed or it's rejected for whatever so reason. So it is a bit of a process that we have to walk as an industry, I believe. But again, sorry, I don't have the answer for you. I think, yeah, just like you mentioned, as a collective, partner with the right people, get the right tools in place like Henny was mentioning. And that's the advice we can offer you for now.
Harry, would you like a last word on that?
Yeah, I can only echo what Reino said. And maybe from that perspective is don't shy away from compliance. Compliance is not a shark or a lion that's going to bite you. Speak to the right people and open the communication channels. Rather come up with a solution from a proportional perspective than just throwing your hands in the air and saying, damn compliance.
Okay. Ladies and gentlemen, thank you very much. I must just, before I leave, just a thank you and an apology. Thank you very much for your time, gentlemen. Apologies I didn't introduce you. I was so kind of in the zone from the last panel, but you did a fantastic job in introducing yourself, and I think your answers to all the questions that were posed, not by only me, but by the audience. We've gone. No, we haven't. We're back. Certainly did a lot to convince the people here that you are truly experts in your field. So I thank you very much on behalf of everyone here for your time. Ladies and gentlemen, round of applause. Thank you very much.
Shall I hold the mic there for you? Cheers. Cheers, man. Thank you, thank you. Let's give them another round of applause, ladies and gents. Thank you very much.
Thank you, sir.
Cheers, man. Thank you, Darren. For
Pleasure. Thank you.
All right, so we're going to get our final speaker up in a second, but just echoing once again, as I say, looking at this whole world from a consumer perspective, I like picking up the little tidbits that we have. And, you know, the confusing language that you find in contracts, I liken it to the way a mechanic, have you ever taken your car to a mechanic and they open the boot and they do that thing, they go, you know you're going to pay and you don't know what you're going to pay for. So it's nice to know that there's an active effort to make that accessible to many people. All right, ladies and gentlemen, our final speaker for the day is going to be touching on the most valuable skill that you can utilize and hone in a world that is changing faster than ever. A man that we call Mr. Suits and Sneakers himself, the CEO of Suits and Sneakers. Please put your hands together, ladies and gents, for Mr. Mark Sham. Chugga, chugga, chugga.
I would like a much better welcome than that, please. Hello. Well, thank God I'm not going to talk about funerals. I'm not going to talk about death. I'm going to talk about life. In fact, I'm going to breathe some life into your hearts and souls, hopefully. It feels like a little bit of a morgue. Is that it? Is that was the goal? I'm just going to wake you right up. Is that okay? My name is Mark Sham. I am the founder and CEO of a company called Suits and Sneakers. This matters zero to you. All you need to know is that I got kicked out of school when I was 17. And so I technically have no right to be on this stage. None whatsoever. I have no formal qualifications. In fact, it's ludicrous. It's madness that they would ask me to speak. I mean, on what basis? I don't have a degree. I have nothing. They have completely messed this up. But it turns out that getting kicked out of school was a masterstroke I didn't plan for. Because through a series of entrepreneurial journeys, I got into public speaking by accident about 12, 13 years ago. And an interesting thing started to happen. I started to get paid more in an hour than most people at the companies were paid in a month. Now, I don't think you understand. I would get paid sometimes 50,000 Rand for an hour, and most people wouldn't earn that in a month. And if that sounds like a flex to you, it's not. It's just so crazy that if I were to apply for a job the next day at the same company that hired me to speak, they would never let me even get an interview. Now, I want you to think about how crazy that is. The day before, they would ask you to come and share your infinite wisdom with the audience, and they would pay you well for your time. And if the next day you said, could I have a job? Could I at least interview? They'd say, no, you can't qualify. Not so shocked. Is that normal? So I don't have a lot of time with you, and I actually just have one slide for my whole 25 minutes. I'm about to manipulate you emotionally. You see that little girl? That is my little 1-year-old. Her name is Nora. She's the cutest thing, and she's absolutely the reason we're going to breathe some life into you. And there's a very specific reason I have chosen to use one slide for the day. It's because these pictures were taken around her first birthday about 2 months ago. Now, I'm just curious. How many of you have kids? Okay, so I just want to apologize ahead of time. Before I had Nora, if you would tell me anything about your children, I couldn't give less of a shit. There was nothing that you could do and tell me about your kids that would make me care. It wasn't that I hated you or your kids, I just didn't care. And then I had Nora, and now all I do is talk about Nora. In fact, I have to fight myself 24/7 to not speak about Nora. And I just want to apologize for being such a dick before. Good. I'm just checking that you're awaking with me. Okay, but I'm not just putting her here just for the sake of it. This 25-minute patch that I have with you, I want to talk to you about a concept called the most valuable skill. You see, because I've been thinking about my responsibility as a father to Nora. And one of the main responsibilities is, I'm sure you'd agree when you have kids, is how do you prepare your kids for the future? Okay, so a lot of this talk is centered around the year 2046. Can any of you imagine what that year would look like? I'm just curious, how many of you know what I should teach Nora today so that she will be viable, relevant, and she'll earn a solid income in 2046? Any guesses? What would you teach your kids to be successful in 2046? Say it again for me. Can anybody tell me what you say? Communication. Sir, you've just messed my whole talk up. Not really, but what you've hit on is a concept of what I call the core skill. Okay, so I want to just take you back. I got kicked out of school when I was 17, but there was an invisible contract that was starting to break when I was 17, 2001. The contract at the time basically stated, if you go to school and you get good marks and then you go to varsity and you get a good degree, you'll be super valuable. Part one. Part two, you'll be valuable for a very long time, like until the day you die. And three, if you get a good degree and you get a good job and you make money, you'll be happy. Well, I think an interesting thing has started to happen because my grandfather was in the same job for 50 years and now we have absolutely no clue what to teach Nora. I was caught in the middle. I just want to share a specifically interesting stat with you around the third part of the contract, that you'll make money and you'll be happy. I'm busy writing a book called Happiness Isn't What You Think. I'm about 2 months away from completing it. It's my first book. And in lieu of writing this book, I came across a 2024 Discovery Life study, paper. And it was speaking specifically about men. Can I just share 3 statistics that are frightening with you? That really woke me up. 1, suicide has officially overtaken motor vehicle accidents as the leading cause of unnatural death in South Africa. Suicide claims for those over 50 surged by 70% in the last 5 years. But here's what's probably caught me the most. In the 41 to 60 age bracket, I'm 41. In that bracket, 41 to 60, 45% of all unnatural deaths with men are suicides. Almost half of the people we lose in that demographic are self-inflicted. So I think this is an interesting discussion to be had, because when I got kicked out of school when I was 17, everybody came to me and said, don't throw your life away, go back and finish school at another school. And something in me couldn't quite articulate what I can today, which was, what's the point? For what? Tell me, what are they going to teach me in that final year that's suddenly going to make me valuable? What you're wanting me to do is go get a piece of paper that is given to me by a committee of strangers, and the paper deems me to be smart. That's it. I'm not saying we shouldn't send our kids to school. I just want to be clear. With my own daughter, I would much rather have her finish school. It's just that I'm not relying on the formal education system to prepare her, because I think the formal education system is really helping young kids be successful 40 years ago. So the question is, how do we help Nora, my daughter, be successful in 2046? And I'm just curious, by show of hands, how many of you want to earn a living in 2046? Geez, by the look of it, how many of you want to be alive in 2046? Thank you, just checking. So how many of you want to earn a living? How many of you want to be successful? You want to be valuable? You want to create and receive value in 2046? It's not that far, it's 20 years. Okay, so this is really just what I want to leave with you, and normally I do this in about 90 minutes. I want to tell you that the thing that's broken that contract is largely the internet. The proliferation of information has changed the speed at which the human race is evolving. Thanks to the internet, human beings are sharing information with each other faster than ever. And thanks to various technologies, in short, what's happening is that humans are building on top of each other's thoughts, ideas, and technologies faster than ever. It's created a quickening in the way the world operates. How many of you would agree? How much has changed in the last 5 years? Okay, the last 10. We have no clue what the next 20 years are going to look like, which makes it practically impossible to prepare. What the schooling system does is it gives you hard skills: math, English, science, computer literacy, geography, history. It's not that these topics aren't important. They are, but to a point. It doesn't help, though, to teach young people what to think. It doesn't help young people to teach them how to memorize in a world of Google and AI, though. Don't you agree? So the next level of what the schooling system kind of touches on is it passes on soft skills. But just listen to that language. Just go with me. Soft skills. How many young people do you think are incentivized to learn soft skills? How many people in the workplace are incentivized to learn soft skills? Those cute little leeches that hang off the bottom of your bum skills. You know, the last little things to get those skills. No, hard skills. Go become a lawyer. That's what society does. It glamorizes certain professions, right? Become a lawyer, a doctor. You guys, if any Indians here, you know. Indian people know, right? You're only allowed to become a doctor, accountant, lawyer, or architect or engineer, right? But then we like soft skills. Oh. Soft skills are actually quite valuable. It turns out so valuable, in fact, that they're not really going to change. So I would like, for the sake of today, to change the narrative and call them core skills. Core skills. See, the system in general, even in the workplace, is teaching young and old what to think. It doesn't really teach them how to think. And my argument is the only way to be relevant in 2046 is you have to focus on who to become. In a world that we have no clue what it's going to look like and we can't prepare for, I'd like to simply lay a case for what I call core skills. And I'd like to give you some basic examples of core skills. One example is simply that with the proliferation of information that has come about because of the internet, I would argue that a core skill is learning how to unlearn rather than to learn more. You have all the information available online. How many of you here have six-packs? By show of hands. I see Temba putting his hand up. Well, I'll put my hand up too then. Okay, how many of you know how to get a six-pack? Yes. If it was just about knowledge, you would all be fit, healthy, and you wouldn't die so early. We wouldn't even be having a funeral summit. You'd all live forever. But that's the difference, is people can know how to do something and not do it. And so I'm arguing that with all this information coming out, it's actually a harder trick to unlearn than it is to learn new stuff. There's just so much coming at you. So what should we unlearn? Well, I'll give you a simple example. I think one of the things that I would like to pass on to Nora, she's a cutie, eh? One of the things I'd like to pass on to my daughter in 2046 is around the shifting of her own identity. You see, what human beings do well is we create identities in the form of nouns. I am a lawyer. I am an accountant. What COVID taught me, when basically government said, I'm sorry, you can't earn a living, but we won't help you, best of luck, is you had to completely relinquish the idea of an identity because the things that you did to get here won't be the things that you need in the future to thrive. So when our dear government puts one arm behind most small businesses back and says, you can't do anything that you do for a living anymore. Like you can't, if my business is centered around hosting events in person. Sorry, you can't host events during the pandemic. But we won't help you in any way. But best of luck. Good luck. We hope you come right, but don't spread the rash. Stay home. So suddenly what happened to me in the pandemic is I had to relearn how to see myself differently, because my whole thing up until then was, I am an entrepreneur, I am a speaker, I am a writer, and I had to reframe my thinking over time to become someone who just writes. I write, I speak, I think, I entrepreneur, I lawyer. I'm not a lawyer. See, I'm arguing that the formal education system up until now has prepared people to have identities like stone houses. That's why we very proudly proclaim, I am a lawyer, I am an architect, I am a salesman. And I'm telling you that since we have no clue what 2046 is going to look like, we almost have to teach young people how to be able to move away from identities that are built like stone houses with deep foundations and move them toward having identities that are like tents, that are easy to get up and go and move around. But it's not so easy. It's not so easy because people become very befok about their identity. They get serious about it. And the funny thing is that your identity, largely, without getting too deep into it, is not even yours. You were given your identity. Ma'am, did you pick your name? I wouldn't have picked Mark Sham, I promise you. Did you pick your gender? Don't worry, in 2026 you can now, so you're safe. You know what I mean? Did you pick your ethnicity and your culture? See, the whole crazy thing is I'm technically Lebanese. It was just given to me. That means, just for those of you who don't know, I have to walk around very angry, wanting to punch people all the time, and I don't have a neck. Do you know what I'm talking about? Do you know how Lebs are? My butt, don't disrespect me, my butt. It turns out I didn't choose that. I didn't choose my religion. People don't like that one. Like my dad didn't sit me down one day and say, here's a 12-page booklet with all the religions that I think would interest you. Study it for a while and tell me which one makes most sense for you. Did you pick your religion? Hey, wouldn't you know it? You inherited it. And a lot of your identity isn't serving you, but we just kind of blindly go on. So do you understand the difference between a hard skill, learn how to type, and a core skill, unwinding your own identity and being able to navigate a new identity as and when you need it? I think that might serve her quite well in 2046, even though I have no clue what 2046 would look like. What are the other kinds of core skills that would probably do the universe really, really well? I'll give you a good solid one. How about the ability to repeat something even when it's hard? Because we're kind of living in the world right now that says, no, I don't want to lose weight, just give me the GLP-1. Do you know what I mean? It's been like this for a while. And you can't blame human beings. We've suddenly gotten so used to convenience to the point that it's actually messing us up. But now, quite literally, if you want the food, you can Uber it. If you want to talk to anybody on planet Earth, you can text them, and in 2 seconds, they get the message. Are you with me? You can have your meetings online. You don't even have to leave home. And these things aren't inherently bad. That's not what I'm arguing. So I'm not on stage to judge. But have you ever heard the beautiful quote, there are no solutions, only trade-offs? This quote has changed my life. Is that everything in life comes with a trade-off. It's never a solution. By stepping left on this stage, there's a whole world to my right that I don't entertain. There are no solutions, only trade-offs. So there is an unintended consequence of having everything be so conveniently given to you in 2026. It's that people are always of the mindset of seeking convenience and comfort. You could argue that a great core skill to master is to learn to have a relationship with pain. I mean, normally that would be a morbid topic, but we are at a fucking funeral service, you know what I mean? So we might as well get going about it. Think about this, how crazy this is, that from young, you get taught math, English, science, and I just want you to know, Pythagoras helped me during the pandemic. You know, when I was having panic attacks in Woolies because I lost my income, Pythagoras solved things for me, let me tell you. The ability to calculate the hypotenuse of a triangle saved my anxiety. Thank God for it. It's so funny that we will teach young people for 12 years math, English, and science, but we won't teach young people or old people how to have a relationship with pain. And what do I mean by pain? Just for a second, I don't just mean you cut your finger pain. I mean, if you, in 2026, try any new skill, you're going to suck at first. So in other words, there is pain in the form of experimentation and not coming right. In fact, in life, everything from here is going to come in the form of experimentation. We used to teach young people how to go through life like a laboratory. Like a factory. We move people through a conveyor belt, go from grade 1. Oh, did you get 60%? Don't worry about that 40% gap. Just go to the next level. The next level became the objective. Grade 1 to grade 2, grade 2. This is why we mess young people up. We take them through 12 years of schooling, and then we say to them, what do you want to study? And the natural disposition is, what are my options? We've trained young people. By the way, did any of you go to school? I'm talking to you, spoiler alert. I'm talking to you. We've trained everybody to go from 1 to 2 to 3 to 4 to 5. Now, because we don't know what 2046 is going to look like, we have to retrain and unlearn people of all ages to throw many darts at the dartboard, constantly experiment to figure out what the future will look like. But we've grown up in a world where failing at anything is bad, so we do anything to avoid it. You know the only reason I have a job as a speaker? Because I'll say bad words like shit on stage and not give a shit. Do you know what I mean? Because you know the best thing that ever happened to me was getting kicked out of school. I had to figure out life through the form of entrepreneurship, which means I am excluded from walking the usual vanilla tightrope that everybody else is so scared. I don't give a shit what you think of me. Do you know what I mean? Do you know what a power that is? What a joy. I would argue one of the greatest core skills you can teach is this idea of what we call cognitive dissonance. Cognitive dissonance is the ability to hold two or more opposing ideas in your head at the same time. In other words, with regards to relationship with pain, you have to simultaneously understand that pain is a great teacher, but you should not actively seek it out. But it is also inevitable, and it's going to come your way no matter what you do, and so you also have to embrace it, but you shouldn't long for it. Do you understand that those are two opposing ideas at the same time? Now, let me just tell you, most rich people can't hold two opposing ideas at the same time, because this is what human beings do. We're linear. You're good or you're bad, you're up or you're down, you're on or you're off. Can you have a job,
be successful, have a roof over your head, and be incredibly grateful for being on that side of the coin? And can you also be severely overwhelmed at work with a million things on the go and just feeling pressure? Can you be both? Welcome to cognitive dissonance. The thing we try to teach young people out of. We try to put people in these very specific boxes. You this or you this, you this or you this. I've constantly my whole life been called a fence sitter. I'm just like, but both are true sometimes at the same time. And so cognitive dissonance relates to relationship with pain. Because no matter what you do, pain in life is inevitable. In order to be successful, you have to experiment, which means you have to be wrong many more times than you must be right. And a lot of human beings in this room will do anything to avoid uncomfortable or difficult. Which is quite funny, because it's like owning a car and telling the world that you don't have enough time to put petrol in. Like, it's gonna happen. You're gonna run out of fuel. There's a point where you have to go to the petrol station. You cannot avoid it, but this is what human beings do. I've spent some enormous time with very rich people who literally are so out of practice with their own emotions that they can't even just tell other people who they're grateful for. They can make millions of rands every month, but they can't stand on a stage and for 2 seconds be vulnerable and open themselves just when they're grateful for something. You think that's successful? I just think that's financially successful. So I'm trying to pull this back with you a little bit. I think these ideas, relationship with pain, cognitive dissonance, the ability to repeat even when it's hard. Like, a lot of people call something their favorite book and they've read it once. Cognitive dissonance is simultaneously learning not to give a shit about what people think, but also not being a serial killer, because they also don't care what people think. You know what I mean? These things may sound insignificant to you, but the biggest and hardest lesson that I think we're all going to start to learn is that as AI, as technology starts to remove the need for you to be highly successful in your left brain. Right now, what technology is starting to do, not just AI, is it's replacing the left side of your brain, because what took you 12 years to learn, a smartphone can do in 2 seconds. You cannot compete with it because you still need to pee, you need to sleep, you get sick. You cannot compete with this thing, and it is getting exponentially faster and more possible. So almost the only valuable skill that you can lean into is core skills, and it is fundamentally completely opposite to what you were taught. And yet that's what you're going to need to thrive, is the ability to figure out who to become in the future, not what to think and not even how to think. I could talk ad nauseum about this topic, but I would urge you, when you have days like today, when you have these time frames where you get out of the office and you come meet people and you listen to different speakers, you can choose to just mindlessly tick past some of the things that I've said and just go on with your life. And I hope you bash your pinky toe on your bed tonight if you do that. But if you have the minerals, if you have a little bit of the chutzpah to just listen to what I'm saying, you know, a high school dropout who coincidentally happens to own the venue that you're in, which also we've got to do a lot of work with that power outages, hey? We've got some work to do, I'll admit. Clearly threw the dart at the dartboard there and messed up. Thanks for not firing us on the spot. I guess my job today was just to come in and just to act like a little fairy and sprinkle some wake-up dust on you. You know what I mean? Just to kind of get you out of your little comfort zones. And so, I don't know, maybe I said a little naughty word that offended you. You probably want to ask yourself why. You know what I mean? You probably want to just do a little reflection and ask yourself why my feelings matter above facts or anything else. You know what I mean? Maybe just my pompous, antagonistic way just got you a little. I would ask you just to take a little bit of time to become self-aware and ask yourselves why. I've never, ever really seen people move because they're comfortable. So I hope I pissed the shit out of you. I hope I upset you so badly. I hope I ruined your day, but I hope I gave you something to think about. Thank you for entertaining me for even 2 seconds. This should have been 3 hours longer, but I don't know if I could have survived your glum faces for that long. But nonetheless, I am deeply and honestly so grateful, seriously, that you're here. I hope I gave you something to think about. I hope I gave you a little laugh. Hey, mama, you got that long face with me. I promise you, life's short. You know what I mean? None of us are getting out here alive. Last but not least, I just want to say to the organizers of this event, beyond the jokes, we are a group of entrepreneurs that run this space. And although today this venue is being used as a conference venue, what happens here on a daily basis
is that this is a clubhouse for small business owners who are trying to grow and trying to thrive, and we are trying to create the space for them. So when the organizers, when Marius and his team, when Nick, when Eugene choose to support us as opposed to some boring hotel, it's not just me buying a third Ferrari. The money and the effort is actually going into an ecosystem here to help small businesses. And so to them, not you, Temba, to Marius, I want to say thank you so much for giving us the opportunity to be here. Even thank you for giving me a second to offend your guests. I'm so grateful. To the Chili Pix team that built this whole together, Nick, Eugene, and the entire team, you have no clue how much work and effort they put in here. So I'd like you to use more of the smiley muscles in your faces and less of the glums look on your faces. And thank you for having me, and have a shit hot day.
Mr. Mark Sham, ladies and gentlemen. Sure, if you weren't awake before, you're awake now, eh? That is for sure. I did get a skrook when he was like, no one's getting out of here alive. I was like, wait, we need to put some time frames on this, like life or the building. So you will get out of the building alive, although T's and C's apply. Yeah. So a quick one, and Mark touched on an interesting thing there, because I've been having this discussion with a couple of dads in my circles. This exact same thing. How do you future-proof your children? And I think it comes down to a single statement, at least what I've chalked it up to, and it's this simple fact that people will pay you, or people will hire you, not for what you do, but for how you think. And I think that's the critical thing, and it ties straight into what Mr. Sham was saying there, is when I talk to my kids, I need to make sure that they are thinking, that they're absorbing things, internalizing it, and then putting it out into the world. This is going to segue into something cool that we're doing at the moment. We spoke about giving back, but I think that is a critical thing. I meet people all the time who can do this one function. They can do it damn well, but this is all they can do. And then the world changes. From the time that we got cell phones, I got a cell phone in grade 7, single line of text. That was it. SMSing friends. Please call happy birthday. Then we got BBM. In the space of 4 years, we went from single line text to playing music, cupped like this. You know the younger guys here, cupped, walking around, playing jams. Neo, you remember those days? That happened in 4 years. For my parents to get from no telephone to telephone took like 30 years. So being able to think unilaterally is really the key, I think. Talking about thinking unilaterally, we spoke about this event this year being about giving back. So we've partnered up with this foundation. They create these books called Finding Thabo. Now, we spoke about the Lacquer Network earlier. I was lucky enough to be at the event in Cape Town a couple of weeks ago, and I got 2 of these books for my kids. Now, Finding Thabo is, everyone know Where's Wally? You know, Where's Wally, Where's Waldo, that sort of thing. So this is a South African version of the book. It's called Finding Thabo. And what we do is the kids get a copy of the book, and they've got to find Thabo in various instances. Thabo is at the taxi rank. He's in his room getting ready for school. There's lots of little things that the kids can find through there, lots of talking points. So you ask the kids, where's Thabo's shoes? Where's his brother's shoes? And they have to rationalize their thoughts. They go, well, those can't be Thabo's shoes because maybe they're tiny shoes or they're pink little high heels, not to put anybody in boxes. You know, if Thabo wants to wear high heels, he can. But it just helps kids open up their minds to really rationalize and submerge themselves in the world that they're in. So when we talk about giving back, we've donated, thank you to you guys, just by simply being here, we've managed to donate 17,500 Rand to the foundation that does Finding Thabo. So a big thank you to each and every one of you guys. And like we say again, it's starting at this level to teach kids how to think. Kai, who is, I think, one of the founding members, Kai sent us a quick video, so we'll just look at that quickly.
Hello to all the delegates and the organizers of the second South African Funeral Industry Summit. My name is Kayang Gagiano, and I am the Chief Partnerships Officer at the Reach Trust, a tech for good South African nonprofit. Now, funeral insurance is all about planning and preparing for the most challenging times in our lives. But the wonderful thing about this year's summit is that the theme is giving back to our communities, which means that we can also plan and prepare and invest in brighter futures for South Africa's youngest children in our most vulnerable communities. And that's where Finding Thabo comes in. Finding Thabo is a play-based program and a brain activation game that the Reach Trust introduces into communities across South Africa. It has two components. The first is that we're empowering caregivers, such as parents and teachers, and informing them and educating them around how early childhood development works. But secondly, and perhaps more importantly, we're actually reaching children with this incredible program and helping them to reach their developmental milestones with a focus on early literacy and language, as well as mathematics and executive function. So a portion of all ticket sales of this year's SAFIS event are going towards Finding Thabo. And for that, I would really like to thank the organizers of this event, Marius and Stephen from 360, Eugene and Nick from Chili Picks, and their amazing teams, as well as you, the delegates. You can find more information about the Finding Thabo program on the SAFIS website, and you are free to email me at Kayang, K-A-Y-A-N-G, @reachtrust.org. I'll share those details with you as well via the website and social media. We're so excited to be able to put more Finding Thabo resources into communities. We've already reached 13,000 early learning centers across South Africa, and with your contribution, we'll be reaching even more. Enjoy the rest of your summit, and thank you again.
Right. I had the joy of meeting Kayang at the summit. It took me about 4 times to get a name because I'd never heard. I know some of you guys were reading it. What? Sorry? I don't know. All right, ladies and gentlemen, I think that pretty much concludes the formalities. What I'd like to do now is to invite you guys. We should actually close the lunch. You guys are serving lunch, eh? Look at these diligent individuals here who've waited. We should put you guys in the front. But lunch is served. We invite you to have a little snack. The venue is going to be open until 6 p.m. So please network. I know there were lots of questions that still needed to be asked with some of our speakers. So make sure you do that and scan your barcodes. Make sure that you can carry the conversations above and beyond. On that note, I think we should just end up with a little energy. Can I get a hoorah from you guys on 3? 1, 2, 3. And just from the top of you guys, because you guys like to make lots of noise, everyone on the mezzanine. 1, 2, 3. Hi, they didn't even listen to the instruction. Ladies and gentlemen, thank you very much for the time, and we'll see you next year. Cheers, cheers.